Morning all. How are we all doing? Morning Marion. Morning Diamond. Morning Marion again. Two Marians. Morning Bipapa, Rahul, Dwee, Michael. Welcome aboard. How's everybody doing? All ready to make some money today? Well, actually, I already have made some money today. Already done 1.1%. Not bad for the morning, is it? Is the microphone okay? Just let me know that you can hear me okay, because I've got a new camera. You can see me in high res now. How cool is that? So it's using the mic on the camera rather than my normal mic. I have tested it. I think it's okay, but it might be a little quieter than normal because the camera's a little bit further away. But anyway. Morning, Brian. Morning, John. Morning, Rob. Morning, Mr. Chris. Afron. Morning. Good. Everybody can hear me. Excellent. Cool. Right, we have 7 minutes to go until the open and a new haircut. Everybody said it looked like Martin Freeman, so I had to knock that one on the head straight away. Not Martin Freeman anymore. More like Jason Statham now, I think, don't you? Mic check, 1 2 1 2. Morning, Stevie. Right, for the news, before the market opens, let's crack on with the news and have a look at what's going on potentially today and this week. So, obviously the clocks have changed. So this afternoon, 2:20 p.m. UK time, I will be on, not 1:20. We've moved back to normal now. So back to normal times, 2:20 in the afternoon, which means I might actually get some work done because I'm going to have time in between streams to actually do something, which is good because I've got a lot on it to do and I've not actually managed to do anything. But anyway, so there's no news today. We've got the German IFO business climate at 8 o'clock, which is at market open. So the pre-market might be a pretty quick one this morning. We'll see. And then the only other news we got today is Bailey speaking this evening, sort of 5 o'clock. So nothing really there. 8:45 tomorrow, we've got Bailey again. And then we've got US dollar consumer confidence, which again, bit hit and miss. Wednesday, we've got the CPI for the Australian dollar. Then we've got the German preliminaries on Thursday morning, all day. German preliminary CPI all day. It's a report. How does that come out all day? Don't know. That's a mistake. I don't know what time that comes out. But then we've got the GDP for the US dollar. We've got Swiss. We've got Makler speaking at 4. Lagarde on Friday, and then GDP for the CAD. So and PCE for the US dollar. So it's a really light news week this week. There's not an awful lot happening. CPI figures, but they're for the Australian and the euro. So and the euro is only a preliminary month. So I don't think we're going to get much movement this week on news. So I think it's just going to be whatever the market wants to do. Morning, Virginia. Morning, Baggy. Thanks for the help over the weekend with the EA. No problem. Morning, John. 44 people in here and 7 likes. That's not acceptable. Hit the thumbs up button. You need some pre-roll before the news. Pre-roll? Well, that sounds like a technical term. I don't know what that is. Morning, Afrox. So this morning we're going to do a little bit of a session on compounding and also how to grow a small account. I get asked this question all the time. So I thought if I do a video on it, I can stick that on YouTube, and every time someone says, can I position trade with $500? And I say, no, don't be ridiculous. I'm actually going to show you how you can. But anyway, morning, Hari Krishna. Ching ching. How we doing? He meant cauliflower. What? Don't get that from, sorry. So there's your news. Over weekend news. Holy crap, what's for this lot? Okay, we'll have a look at that in a sec. There's been a lot of news over the weekend, a lot of red. I've got 3 minutes to the open. Right, where are we? Right, so one of the main things that's happened over the weekend is Russia has moved its tactical nukes into Belarus. Not quite sure what that impact of that is going to be, but obviously it's not good that he's talking about tactical nuclear weapons. The tactical nukes are more of the short-range nukes, where they would not, blow up an entire country sort of thing, but it's more your short-range, clear an area to go in type nukes. So the fact that they're in Belarus, which is north of Ukraine, it's another front potentially. We might find a little bit more fear creeping in if there's more mentions of it this week. We'll see how the market reacts this morning. But obviously, if that keeps coming up throughout the week, that could escalate the Ukraine war, and obviously that isn't going to be good. Belarus hosting Russian nuclear weapons would mean an irresponsible escalation and threat to the European security. So again, this is all about getting NATO involved, which is what we don't want. Situation does bring the US close to a recession, blah, blah, blah. So what's this news this morning? Silicon Valley Bank sold to First Citizens. So the Silicon Valley Bank issue is now sorted by the looks of things. So that's out of the way. Done. Cool. Okay. Right. So that's the news. I'll go through the trades that are closed out on Friday. But let's start off with the DAX. So DAX this morning, we've got our gap up. If we have a look at last week, basically, where are we? Monday. There we are, Monday. So where's my pen? Is it done over there? Do you know what? This Epic pen, I've got this Epic pen, which is what I use to draw on the screen, right? And every time you open it, it plays hide and seek with you, right? You open this thing up, and sometimes it appears down there, sometimes it's up there, and it never opens in the same place. This morning it's down there. I've never seen it there. It's a new hiding place it's got. First time it's ever been down there. So anyway, 22 seconds to the open. So as you can see, we opened here with a gap and closed the gap on Monday, pushed up, gapped up, pushed up. Then we had peak formation on Wednesday. Thursday, we gapped up and closed the gap, and then we came back down pretty not far away from where we started, but close to where we started, and pushed back up again. So we got a gap up situation. So we're looking for a gap fill this morning. So opening range, pre-market opening range to the downside would be a good one. It's a pretty big gap and a decent distance. So about 100 points to the downside. So we've got a pretty good gap down opportunity. Pre-market set file, if you're running that, you've potentially just gone long on that. And we have gapped up. So target today would be last week's high as your preliminary target. You've got yesterday's high, which is pretty much the open. And then previous day's highs in there. So I would be looking basically, if we're going to run up to the highs, it's well within ADR to go up to last week's high, but we'll see. Morning, Gordy. Morning, Clips. How we all doing? 58 people now and 15 likes. I don't think the algorithm likes me this morning, does it, for some reason? Where is everybody? Maybe it's because I showed my face and looking like Martin Freeman last week. Everyone's run away. So that potential pre-market opening range break is faltering a little bit. Oh, the other thing as well, I signed up for a futures account this weekend, so or rather on Friday. So I'm going to get Jigsaw up and running. We might do a bit of futures trading this afternoon. I'll see how it goes. Not particularly strong open. We did have that news. Let's have a look at what the 91, 8 o'clock. Why has that not come out? Clock's wrong. 9 o'clock. Right, okay. 9 o'clock, the news is. For some reason, I just assumed that would auto-update, but it didn't. There we go. Morning, it's time. Brian, audio is jumping left to right in speakers. I've only got one microphone. I don't know why that would be. Something to do with this mic, I guess. Don't know. I don't have control over left and right, I don't think. I can down mix to mono, route audio to the central channel instead of the left and right stereo channels. Try it now. Is that okay, Brian? Am I in your left and right? Hang on, I'll tell you what I'll do. Look, watch. Ready? Left speaker, right speaker, left speaker, right speaker, central speaker. How's that? Does that work? Morning, Anna. GJ, very bullish. Yeah, we'll do some FX in a minute. Afternoon, who's right? All trades working out currently. Good. Perfect center. Is that so? That's working now, is it? So I've down mixed you to mono. I've never tested this before, so if it's not working for anybody, let me know. Right, there you go. There we go. I'm broadcasting in mono now, everybody. Who'd have thunk I had two voices? UJ long two. Yeah, we'll have a look at all the FX pairs in a minute. This morning, there's no ADRs. Obviously, there's no weeklies because there's no ADRs. So there's no ADRs hit so far today. Pound US dollars screwed up. I must get this terminal changed at some point. There we go. Right, so your opening range breakout to the upside is holding at the moment. So this is we've got 20 seconds left to the initial cash balance, the 5-minute opening candles in. Not particularly vigorous start to the morning, but we'll see. Pretty slow at the minute, isn't it? Okay, there's your 5-minute opening range. So we'll see if we get any movement off the back of this now. So I fancy this gap fill today. Quite often gaps on Mondays get filled. And the fact that it's gapped up rather than gapped down on all this talk of nuclear stuff. We will see. Today is a more peaceful day, hopefully. Well, actually, I need a bit of volatility, really. But afternoon, Chris. Morning, Chris, even. Deutsche Telekom. Deutsche Telekom? We see a face, yes. It's me. My first time seeing your face. You got a bucket? Right. I had to have a haircut, Chris, because everybody said I looked like Martin Freeman on Friday. So I had Martin Freeman. Who's the other ones we had? Noel Gallagher. I don't think there's any particularly complimentary ones. So I think we need a bunker and 60 years of food supply soon. Yeah, I think you might be right, Afron. We'll see. Hopefully not. Okay, just putting back down below the 15-minute pre-market 15. Sorry, one sec. Did anybody get in oil with me on Friday? We took the break there. Very nicely in profit, but a little gap up, which closed. We're just coming up to yesterday's high or Friday's high resistance. So if you are in oil, that's nicely in profit now. We are just coming up to yesterday's high, so you might want to get just watch it. If you're potentially wanting to use one of those break-even stop things that gets broken even. We've got a propulsion gap tested there. So we've we should hopefully have a clear run this morning on oil. We'll see. Are you seeing that you almost have 8K? Oh, 8,000 subscribers? Yeah, I know. 7.8 up to now, which is pretty good. I'll do a naked stream when we get to 8K. Not really. How's your arm? Yeah, it's getting good, thanks, Big Papa. It's I'm starting to come off the drugs this morning. Well, I'm not. I'm reducing the dose today, so down to half dose. Diamond's in oil. Yeah, it's going well. Who's right? Is in it? Yeah, sitting 280 pips profit. Cool. Drop the like button, guys. As Chris just said. Diamond taking delivery on some oil. It's not a futures contract, it's a CFD, so you shouldn't get it delivered. This DAX is very, very weak this morning. So the pre-market, the 5-minute opening range, we're really not out of it. So we're coming up to the 10-minute candle. So it's a little bit of a weak one. If you have a look at last week on Monday, which is back here. So that was the move at the open, and then we came up and we filled the gap. So we might just come straight down and do this. That's pretty much done, isn't it? So there's not really any downside targets to aim for from last week from propulsion moves. So it's really yesterday's low to the downside and last week's high to the upside. Sorry, I just message just came in. Nothing exciting. Okay, so we're looking like we're going for a break to the downside on the pre-market on the 5-minute opening range. What do you say? Shall I get a funded 10K account or shall I use your own capital? Depends how much capital you got, doesn't it? Really. And depends how you want to trade. Lots of I can't really answer that one for you. We are going to talk about growing a small account this morning, though. I'm just going to get the analysis out of the way first, and then we'll have a look at that. Okay, so the 5-minute opening range broke is down to the downside, so it looks like a gap fill potentially. That's going very nice. We'll watch that. So we've got 5 minutes to go. So there you go. There's your break of the 5-minute opening range low. So if you were using the opening range breakout this morning on the 5, you're short. You are also, well, not quite. You're just about to go short on the pre-market 15 with a second entry. So the top one will have probably stopped out with a trailing stop. So that could be a really nice, if this gap fill goes today, that's going to be a really nice short. So if you're running both of those, you're going to have two entries short on that. Right. We'll come back to that in a minute. So ADRs, there's nothing today. Completely flat on the ADRs, unfortunately. Fortunately, so pretty quiet session for Asia. RSI's totally flat, so there's no 4 hours, there's no 1 hours. We are dead in the water, so there's nothing to look at there at all. So I'm going to do just a little bit of analysis on stuff that's kind of coming up to support resistance this morning. That's really all we're going to look at. There's no H4s, H1s, or ADR extensions to look at. So there's no opportunities. Everything that's running is running well. It's banked this morning. Got the VPS, yeah. So the what's that? That's the hedge, isn't it? So the H1 hedging set file was banked a little bit this morning. Got a little bit of drawdown going on that. The 4 hour has banked this morning. Got one position open on pound CAD. Other than that, that's banked everything. This is H1. That's the account I'm in at the moment, which is banked 1% this morning, sitting in 2.7. And that is the ADR reversals, which is banked a little bit this morning, sitting in 0.5%. So everything's banked this morning a little bit, but nothing's particularly moving very fast at the moment. So we'll have a look through all the pairs, do a little bit of analysis on the pairs, see if there's anything coming up to any decent levels. And then we'll have a look at the compounding side of things. So if you've got any pairs you want to look at, obviously just shout out. Afron, you got $1,000. Right, so what you might want to watch the session this morning on growing a small account. If you want to position trade, I'm going to show you a way to grow a small account. Obviously, it's very risky because everything is, but and it's again using the position trading to grow the account. But if you want to go in with prop on a 10k account, $1,000 will actually buy you 3 50k accounts. So if you're going to go for it, what I would do is go with 3 50k accounts. They're $300 each. So if you've got $1,000, you get 3 50k accounts. Run 3 different strategies on them. Chances are you get one of those over the line. There you go, you're funded. And then you can use that prop account to make some money, to grow your account. You can do it that way. Euro US dollar yen, Euro CAD. Lee growing faster with the cam. Let's go. 94 people watching now. Still only 39 likes though. That's not enough. Please see yen up 40, 50 pips so far. We'll do Franco. Right. So just going to watch the hourly time frame. And going to flick through everything. So all I'm going to do this morning is just whiz through every pair and give you a quick, this is what I like, don't like, or there's nothing to watch here. It's just a load of rubbish. So up to you how you get into stuff. Obviously using market reverse alerts EA or just the indicator to get into positions. But all I'm really looking for is targets. So if we start off with the Aussie, so I'm looking basically, when I do a quick scan through all the pairs, all I'm really doing is looking for anything that's approaching support resistance. So this is how I trade my prop account basically. All I'm doing is looking for anything that's getting close to support resistance. Just going to buy a scorecard as well this morning. There's not a lot of difference on the buyer scorecard. We've got some good strongs and buys and sells. COT's been updated. Actually, yeah, sorry. Before we do analysis, let's cover COT. So you can see on the COT, let's actually go to COT. You can see on the COT report now, everything is either a 4 or a 0 or a -4. Yeah, so the COT report changed over the weekend. We're now back up to date again. So for those of you who've been here for a while, we've seen the CFTC have had data problems and we haven't had reports kept up to date. So we're now up to date on COT. So everything's kind of changed. We've got an awful lot of zeros in here and it's either 4s or 0s or -4s. So it's extremes in either direction or flat for COT bias now. So there's a bit of a change happening. Which basically, if you look at the COT data, this is the latest COT data. The main change we've had, which is quite dramatic, is the yen. Look, there's 91% of the market now, of the futures market is now short the yen, which is quite a lot. Obviously, what we are seeing is everything coming down against the yen. So what you have to do with this, particularly with the yen, with COT, is factor in the fact that this is actually a safe haven currency. So when we have problems, money piles into the yen. That's got nothing to do with long-term futures positioning on the yen. So that is quite a dramatic change. We've also got the euro now sitting at 75% long and the US dollar not much change, 68. So the US dollar has been fluctuating between 65 and 70%. We're sitting at 68 at the moment. Yeah. Gold, a lot more positioning gone long on gold, obviously with what's going on with the banking sector. So CAD, 80% of the market is now short the CAD. So what I wanted to sort of brings your attention really with this, which is important, is that the COT report tends to get to a terminal rate in the same way as we do with interest rates. So when you're looking at the COT report, You need to look at it a bit like an oscillator. Yeah. When we get to these sorts of levels with the yen, so we're 91% short, what tends to happen is you can't really get much shorter than that. And then what happens when you get to these huge extremes is they tend to scale out of those positions quick, which means they enter a lot of long positions. Hence yen starting to come down. Everything coming down against the yen because they're actually longing the yen because they're so extended short on it. What they will start to do is suddenly pile out. We are always a week behind on these figures, remember. So this may not be the case here. Sorry, there's a message from the school. Always worrying when you get a text from the school, isn't it? So we need to be a little bit wary of this figure. I don't think this is right. If we get any problems like with the Ukraine crisis, with any more banks going wrong, this isn't going to mean anything whatsoever. So that one I would kind of take with a pinch of salt at the moment. The Canadian dollar, however, 80% of the market being short, that's basically because oil prices have been collapsing. Oil, as we know, is potentially starting to rally now. So again, you might look at this and go, right, 80% of the market is short on the Canadian dollar. However, this will start to change. So just because they are massively short on something doesn't mean they're going to remain massively short on something. This is like an oscillator. When you get down to 80, what do we normally find? It comes back up again. Yeah. Sometimes it stays embedded, but most of the time it comes back. So when we've got things like the US dollar sitting at 68, anywhere sort of somewhere between the 60 to the sort of 75 level, you tend to find it will sort of fluctuate around there. When you get to these big extremes, quite often we find we're going to come back the other way. So that is now up to date. But the impact on the scorecard is obviously now we are changing to +4s, -4s, and zeros because all we've got is really hideously long, hideously short, and nothing is really neutral here. There's nothing neutral, is there? The closest thing we got to a neutral is the pound with 63.37. Yeah, so everything is either we are really long it or really short it. So just bear that in mind if you're using the bias scorecard. You've got a lot more going on with that now with COT playing a bit more of a role in that. Okay. Sentiment wise, there's quite a lot of sentiment that is neutral as well. So there's a lot of neutrals here. Actually, it's not that many. I thought it was more than that. It's because it's more heavily weighted towards the buyers. So there's a lot more buyers than there is sellers in the market. So obviously we've got a lot more sell opportunities there. So that's obviously updated on the hourly basis, but we'll have a look at the combined sentiment maybe in a little bit as well. So just wanted to bring that to your attention before I do the analysis because obviously it's important. I'm long so far, US dollar yen. Good. Should be okay there then. What's the bias on that? Yeah, see that's a buy. You see massive long bias COT. Got a +4 because they're all short the yen, they're all long US dollar, so that's a +4. Right, so whizzing through the FX pairs. Aussie dollar CAD, completely range bound at the moment, as you can see. We're just sideways. We had an extension on that on Friday, so there was a potential long opportunity there. Obviously, I don't get in until we're 75 on the hourly or 25, so not in that at the moment. We've got a target to the upside there to come up and sort out at some point. Other than that, coming back down into this propulsion gap down here. That's an old, I don't know what that is. Let's give it that. So yeah, you've got propulsion gap to the downside here to come and sort out, which is an ADR hit low, and then we've got this one up here. So one way or the other, from where we are, it's extended to the downside, starting to push up. So no real opportunities there, range bound. You're bang in the middle of kind of the highs and the lows here. So 50-50 shot either way, nothing particularly exciting, I would say there. Aussie dollar Swiss. So this one obviously has been trending downwards, mainly on the Swiss franc. We've had all that Swiss franc strength. They're starting to come out of that now. So I just want to watch the DAX. So there's your 15-minute opening range. That's just still stuck at the moment. Looks more short than long at the minute, though. So Aussie dollar Swiss. So again, no opportunities on RSI. We're in the middle. We had one long on it last week on the hourly. Other than that, we're not really going anywhere. All upside targets, yeah. So there's nothing to the downside really to look at. Everything is upside. Lots and lots of upside targets on this, which haven't been sorted out yet. There's loads of them. So I would be, say, looking for longs Aussie dollar Swiss. So we assume that's peak formation low, high. This is exactly where we would be looking for a higher low to be put in to push up. So good opportunity there on that one potentially for longs. Hourly, you've just had your reverse alert, which is retested, dropping down to M15. Friday was an entry on that one. But look at these lovely, beautiful targets to the upside all over the place. There's loads of them. So I'd be looking more for longs than shorts, Aussie dollar Swiss. If we look at the bias on the Aussies, Aussie dollar Swiss is a sell at the moment. That's only because retail. So retail at the moment are longing it, meaning that it's more of a short from a retail counter perspective. Other than that, it's pretty much neutral, isn't it? So if you take retail out of the equation, that becomes a zero. So there's absolutely no bias whatsoever. The only reason this is pushed down hard is the Swiss franc money that's come in. And obviously that came out when the Credit Suisse debacle happened. So I'll be looking for longs on that. Aussie yen, targets to the upside. So all of these yens basically, I'll go through all the yens at the same time. But we had that area of resistance, previous support area there, which we broke down through. We're back up and testing that. So if that's going to hold, next leg down is going to be pretty much somewhere where we are, possibly up in that propulsion gap, and then short out of there. But look at all these targets to the upside as well, especially that one there. That's one has already been tested. That one just about tested. And we got this big move down, which was the news. That got retested. So they've all kind of been tested, these upside targets. And it's really, are we going to continue to have all this strength coming through on the yen or not? It looks very, very tired. If you look at it on the 4 hour, it's absolutely exhausted. Look, we've had this massive long push down. It's due a pullback. Everything yen based is due a pullback. However, where are we going to pull back to? Yeah, so there's a good chance that we might just continue this strength down. But don't forget, the futures market is short on the yen, not long. So all this yen strength that we're seeing is counter futures, but we haven't had the futures data for the last few weeks to look at. So so tricky, all these yens, but we've just broken out down below this support area. So we're back above it. What do you make of that? Don't know. It's a bit of a mixed one. So if we look at all these yens, and we obviously know we've had a lot of strength on them. So I've got a long at the moment on the CAD yen, which is an extension from here. Again, none of these have got levels to the left. We've broken down through most of the levels, but pushing back up. But there's just so many upside targets on all these. You just have to think, well, they're going to come back. We know they're going to come back. They come back and sort these out. So it's a case of, if we do not get any safe haven runs, I think everything yen-wise basically is a potentially good little long opportunity this week. But we will see. But look at all of them. Swiss yen. Swiss yen's actually found a bit of support, so that's not too bad. But look, yeah, all look good for longs at the moment. Euro yen, again, target to the upside. Beautiful support bounce we had on that one. So got buy on that one already. That was on that RSI extension. Looking up there. Pound yen, again, targets to the upside, not to the downside. That one has had a decent support that it's come off of. So again, targets up there. New Zealand dollar yen, again, no targets, no real support to the left. We've broken that support. Upside targets only. So everything looks good for longs against the yen at the moment. US dollar yen especially. Look at, I mean, it's just target rich environment up here. Look. So everything basically, I think, I'll be looking for longs at the moment. However, just be aware that if there's any issues with anything to do with anything, banking, war, whatever, the yen is going to benefit. So this is why I love shorting the yen at the moment, shorting everything against the yen at the moment, because you've got much more chance of an intervention from the Bank of Japan or something going wrong with the country, with the world at the moment. And obviously the yen powering up than you have of it not powering up. So although these all look like beautiful longs, I think you have to keep your wits about you a little bit if you're going to trade them. So that's all the yen pairs. Aussie New Zealand. Again, looking at the biases on these, Aussie New Zealand at the moment is a sell only because of retail being long on it at the moment. So want to be shorting it. Targets to the upside again on this one. Support bounce third time. So I'll be looking to come up to the top of the range. If we can break the top of the range, breaking up to there, or indeed there. In fact, that one's probably done. So there's your targets there. Got two upside targets at the moment. However, this is all part of a much bigger short opportunity, which is this move down. So we'd be looking for something like that on this leg. Yeah, so if we're looking for longs on it. But it's a short at the moment based on retail. So as you can see, they're struggling basically to make any headway because all the money is down there. So like that is long though at the moment, but short term. See, I've taken a couple of longs on it here. Look, just RSI extensions. But again, like anything, don't get into anything position trading wise until you've got that RSI extension or ADR hit. DAX is just coming down. We're just testing new lows. We've got, whoops, roughly 60 points to the downside. There we go, popped out the low. So opening range breakout to the downside and gap fill this morning. Aussie dollar, US dollar, range bound. Target to the downside has been tested already, which was a gap fill. So that's been done. Didn't quite fill the gap. Yeah, that gap's still in play at the moment. So that's a tricky one. Again, upside targets and a downside target, both basically in ADR. So absolutely nothing you can do with that today. You can get into it one way or the other, but it's a 50-50 shot, isn't it? Small scalp long on EU to start the week. Cool. CAD Swiss, got buys going on this one at the moment. Again, upside targets all over the place. Canadian dollar, we should start to see some strength coming, assuming that this oil move is going to hold. And again, this is a big if at the moment, but this is exactly what we're looking for on oil. Seems to be playing out at the moment, but it's a tricky one, this CAD Swiss at the minute. All CADs are. If you look at the CAD across the board, it's very mixed. The CAD's basically being battered around a lot at the moment. So CAD Swiss is a sell based on fundamentals, and retail are long in it at the minute. However, we've got some beautiful targets to come and sort out to the upside. So I still like it as a long at the moment, based on the fact that we've done this nice pullback and this lower low is basically potentially going in from last week. So that would be what we'd be looking to target somewhere up there. But again, not extended anywhere. I'm in a long from this RSI extension here, which didn't work. So we'll get into more positions to the upside on that one, to the downside, sorry, if it pushes down. Yens have done, euros. So euros, basically, we've got Euro New Zealand buy, Euro CAD as a buy, Euro Yen as a buy, Euro Pound as a buy, Euro Swiss as a buy, and Euro Odd as a buy. Euro US dollar is the only thing that is a short on this. So Euro strength across the board, mainly based on COT positioning. The market are positioned long on the euro. At the moment, most of the retail crowd are shorting the euro. So again, we want to be long in it. Fundamentals are pretty good. So longs on everything, basically euro, as you can see. So I've got a sell on a mean reversion at the moment here, which isn't working out at the moment, but we've got so many downside targets. So although, you know, futures market, when we're looking at the futures market, we're looking at somewhere between a 6 to 12 week play. Yeah, so it's a month to a quarter is what they're holding the futures contracts for. So there's every opportunity this can have a week or two down before it does another pop. We have got Lagarde speaking this week on, I think she's Friday, isn't she? Yeah. So we've got Lagarde speaking Friday this week. We've got the CPI figures for the euro coming out on Thursday. So we have got euro news. We got the climate this morning, but it's nothing. So we have got euro news that's potentially going to move it. If we get decent CPI figures, we're going to get a push on the euro. If we get negative CPI, we'll get a drop. But she's come out and said basically rates are still going up. So it is still all bullish for the euro, but it doesn't mean it's necessarily going to fly. So I'm still happy to be in short on this one at the minute. Euro CAD, massive extension again. You can see I've taken a few shorts on this. One there, one there. Yeah, all playing out fine. Loads of downside targets on this as well. It's just downside target rich. When you're looking at everything, when you get these RSI extensions, you can play them in any direction. I'm going to show that in a minute when we look at the compounding bit of this morning. But there are more targets to the downside on the euros than there are to the upside because we've had this gradual push to the upside happening. So I think there's a very good chance that we're going to see some weakness starting to creep through in the euro. If we don't, however, though, I mean, I'll just be getting into shorts and then getting out as usual with them. But there's a good chance that we might get some drops. If we get a decent CPI number coming out as a negative, we'll probably find we get an ADR or two ADR move to the downside on the euro pairs, and they'll just come down and they'll grab all this really quick and then fly back with it. So we'll see what happens this week, but at the moment I can't see a massive amount of opportunities either long or short. As I say, everything at the moment, when you look at the bias, although we've got these buys, yeah, most of these buys are being caused by retail a lot of the time. So Euro New Zealand, you definitely want to be more long than short. Euro CAD, more long than short at the moment, but only because of that. If that switches to a -2 there, obviously this becomes a 1. So it just, nothing is massively bullish or bearish. We've got nothing really going over a -7 here. Look, -7 is your absolute strongest sell. We're normally seeing sort of 10s, 12s, and those things you just don't touch them in the other direction. But at the moment, everything is just creeping into sell, creeping into buy. Other than that, it comes straight back into range bound. So I don't really see at the moment a problem taking anything in any direction. As you can see, everything's just playing out because nothing's really pushing hard. There's no squeezes happening at the moment. Franco, your chart screen is a little fuzzy. You need to just adjust your settings, Franco. If your chart screen is fuzzy, make sure you are on 1440. You're probably sitting at 360 or 480 or something. I am streaming in 1440. It's you seeing in 360. Does the market reverse alerts EA have a feature to turn off auto trading when it hits a specific % gain? No. It will close the trades, and you can get it to de-init. So yeah, I mean, there's a setting to remove it from the chart in here. In V4 settings, there is a de-init when closed trades. So basically, if you set that to true, when it closes the position and goes flat, it will deactivate the EA. But other than that, no. So yeah, Euro Swiss, huge target to the downside and a little one to the upside as well. So again, where we are, either way. If you go short and it decides to go long, get in again there. If you go long and it decides to go short, get in again there. Simples, but I don't know which way it's going, obviously. Euro pound, very, everything is just beautiful at the minute. It's just moving up, down, all over the place, just going straight from gap to gap to gap to gap to gap. We've got propulsion gap to the upside, 125 ADR. We've got one to the downside within an ADR. Again, could go either way. There's nothing extended. If we get down and do that gap fill, we're extending on RSI, but looking to long it. So there's nothing particularly useful there. We've looked at the yens. Euro New Zealand was, I think, one of the shorts, wasn't it? No, it wasn't. Buy, sorry. Yes, Euro New Zealand is a strong buy at the moment. We've got retail basically shorting this at the moment. So I'd be looking much more for buys than sells. However, all the targets, again, are all to the downside down here. Yeah. We've come out of resistance on the 4 hour. Yeah, we're in a resistance area here. So there's a potential for it to come back up and tag that basically, and then come back down to these. But all the time retail are shorting this, it's in their interest to go long, isn't it? Because every time retail hit the short button, they're sticking all the liquidity up at these highs. So right now, retail are short. Where are Euro New Zealand? Yeah, so 80% of the retail crowd are shorting Euro New Zealand at the moment, which means that all the money is sitting there and there from last week. What a target. Want to be looking more for longs than shorts, but once they take that liquidity out, obviously retail will not be short anymore, and then it gives us an opportunity to come down. But either way on that, but you're better off taking longs on it really at the moment. As you can see, all the shorts taken will work fine as well. Yeah, everything is just like this at the minute. It doesn't matter which way you get in. It's going up, it's going down. There's nothing strong enough to go into a trend or a squeeze at the moment. But DAX gap fill is nearly, well, it's not nearly done, but it's on its way if you're short on that. Euro US dollar. So Euro US dollar is a short, isn't it? Yeah, -2. So there's no cop bias on this because the market is long the euro and long the US dollar, so they cancel each other out. There's no retail sentiment. Retail are nicely balanced on it, so the only thing we've got there is fundamentals saying to go short euro US dollar. Again, target to the downside there. We've got an upside target there, so for today you could go up to there or maybe up to there and then short it, or if it comes down to there, there's a long opportunity at ADR. I'm in a long at the moment because of that RSI extension going up. Pounds. Everything pound was a short. So pound CAD and pound New Zealand have crept into long territory, mainly because retail sentiment, again, all retail driven at the moment, because there's no massive advantage from a fundamental perspective on any currency at the moment. So and from a COP perspective, obviously, yeah, there is, but that's long term. So everything at the moment, because the fundamentals are fairly flat, everybody's interest rates are going up, everybody's inflation is going the wrong way, everybody's unemployment's wrong. It's literally being driven by the banks and where they need to go to get the money, which is basically retail sentiment. So these will change. That pound CAD that is a +2 at the moment is there because we've got +1 retail. That becomes a -1 retail. Obviously, we become a 0, don't we? So there's no advantage in either direction. You can see on this pound CAD at the moment, it's literally going nowhere. I had a short opportunity on this one, which I took on my funded account from here, which stopped out because it's just not going anywhere at the moment. I was looking for basically this level here, which they tested multiple times to drop. We didn't, we pushed, and then we just sat. So as you can see, this is just going sideways at the minute. These downside targets are still in play. They are all tested though. Yeah, so this one here is virtually closed. This one here was tested. So there's not really anything I can see to the downside to aim for on this, and I can't see anything really to the upside to aim for either. So we've got this big propulsion gap on the 4 hour where we broke that high, but it's not going anywhere, is it, at the moment? So so it's a long from a trend perspective, but it's not really fast. So I can't see any opportunities really to get into this. Shorts from where we are would be more attractive than longs, because I think we've probably got a big drop ahead of us. We're coming down, but But yeah, we will see. Afternoon, Umesh. Morning, even. Morning, afternoon, good evening, good night, all that stuff. Pound CAD. So shorts on this, still got shorts on this, still stuck in this pound CAD. So on Friday, I took an aggressive drawdown control position on here in the live room. There, I'm still in it because we haven't gone anywhere. We've got an upside target to aim for there. And this is what I'm looking for us to come down and complete. So I am waiting to get down there. As you can see, average is now within ADR. So that's my exit if I want to take it. But if we're going to get down to ADR, we're going to get down to here. So that's my exit down there. Just not going anywhere at the moment, are we? So short on that. Pound Swiss, again, high, low, bang in the middle. Yeah. You're going to need John Wick to help with this one, aren't we? I don't know, up or down, one or the other. Which way's the safe haven going to push it if the safe haven gets triggered? That's been tested. However, I think we're probably more likely to come back down here from where we are. So lovely entry there, look, in, out, done. On that high, so I think we're probably going to come down and test those lows. So I'll be looking more for shorts than longs, but again, at the moment, there's just no reason to get into anything on that. Pound yen done. Pound New Zealand, got shorts on this one already. Again, just all these pounds are so strong at the moment, and I've no idea why the pound is so strong. Fundamentally, there's no reason why you should be long in the pound. It's surviving, I think, because a lot of the banking sector in the UK has been, money's been driven in over the last few weeks into it, and we're not going anywhere. So there, don't know why that changed. Did I click on there? I don't know what that was. Anyway, so yeah, like it short. So if we come back up into resistance, we're looking for shorts out of that. Back down into this propulsion gap here. Exit. And pound US, I've got a buy on that at the moment, but again, not really sure where that's going. Everything's just moving up and down. Yeah. It's like I say, at the moment, it really is a case of with the market reversal alerts EA, just let the thing run whatever direction it wants to. There's no real advantage in setting longs or shorts only. Marion wants to look at gold. We'll look at gold in a minute. Gold. We will look at it in a minute. Let me do the New Zealand's. New Zealand hedged on New Zealand. Look at this, New Zealand dollar CAD. Got into a long off that extension, got into a short off that extension, and it didn't move far enough to get me out of either position. So I don't care which way this one goes. Yeah. It's, as you can see, this is what, week 3 of the range bound move. So we'll get out the short down there, add another long, get out there, or get out the long up there, add another short, get out. New Zealand dollar Swiss, sideways again. So this is more of a short than a long from a trend perspective. We've got upside targets here, which have been kind of tested, and these ones here, which haven't been yet. So there is more targets to the upside than there is to the downside. We've got support coming up down here. So any kind of movement to the downside, ADR, that will give you an RSI extension. That will give you an entry long down there. Any kind of push up into those highs, we're going to get an RSI extension to the upside up there. So I'll be looking at that area and that area if you want to play just support resistance. Otherwise, just get in whenever we get any extensions, basically. Got long on at the moment on the pound, on the, sorry, New Zealand dollar, US dollar. I would class that really as complete, but that gap fill there is the fly in the ointment at the moment. So I think we're probably coming down to do this gap. And then we'll come back up into that propulsion. So there's the play. So I've got a long position on at the moment. If we're going to go back up and test the highs because we are in an uptrend, then fantastic. If it comes down and does the gap fill, taking a second entry and go long from there. US dollars. So all the US dollar pairs, everything basically is long. So US dollar is still the strongest currency out of all at the moment. US dollar CAD, as you can see, is a massive buy at the moment. Everything is going right for that one. US dollar yen is also a buy. Everything else is a sell because it's crossed with the US dollar and the other way. So you want to be selling. So the US dollar really at the moment is the only thing out there that is really, really strong. However, we are approaching potentially terminal rates, although they keep saying, oh yeah, the terminal rate is X, and then they put another 0.25% on it. So at the moment we're up at 5. So the US dollar is the most attractive currency from a fundamental perspective. If you've got a load of money, you want to be sticking it here because you're going to earn more. So there's money still flowing into the US. Inflation is starting to come down, which takes pressure off of interest rates. So inflation is a double-edged sword in the fact that when inflation drops, it means that the interest rates drop, which is negative for the currency, because obviously the higher the interest rates, the more money flows in, the more economy flows in, the more businesses invest. However, when inflation is contracting down, those interest rates drop, which means money tends to flow out. So it's a fine balancing act. The thing that is potentially helping at the moment is this low unemployment. So I get the feeling we may well see a 5 or a 5.25 terminal rate, which is what we were talking about. And we're basically there now. So I'm going to keep a close eye on the news and what the Fed says basically about interest rates. I get the feeling they're going to probably pause on the next one, but we will see. It depends what happens to the CPI figures. So if that is going to happen, the US dollar is going to start to weaken. Yeah. So but there's nothing else out there. If you look at the buyer scorecard, there's nothing else out there strong enough at the moment to really send the US dollar into a spiral to the downside if it does start to weaken. Yeah. So there's no currencies out there where you would tend to think, oh my God, that's going to squeeze, because we've got a massively strong pound and a massively weak US dollar. So therefore pound US dollar will fly through the roof. So there's nothing out there really that's going to drive it, I don't think. So again, multi-directions, yeah. Propulsion gaps filled, propulsion gap targets to the downside tested, may or may not. That one open. So any direction. So up to the highs, look for a bounce. Down to the lows, obviously I would look sort of down here for some kind of support. But right now, again, as you can see on the chart here, trade it in any direction you like. Only had short opportunities at the moment to get in. I haven't had a long trigger, so not taking a long on this one. But yeah, either way on it. At the moment, we're bang in the middle of the range. Yeah, so there's a 50-50 shot. We're going up or down at the moment. However, we have got targets more to the downside. US dollar CAD retail is all shorting it. So yeah, it's a massive buy at the moment. So I would be looking to probably getting long. If you drop down to M5, you probably had a reverse alert on that this morning. Yeah, just had it. So you've just had a reverse alert to go long this morning. You've got an upside target there for a scalp. However, yesterday's high, there's a load of liquidity sitting there. Why is there a load of liquidity sitting up there? Because everybody, or 79% of retail, is short. The liquidity is at the high. Therefore, the market will drive up to go and find liquidity when it needs to fill its orders. So up to there, and that's why yesterday's highs get swept. So at the moment, like that is a long. US dollar Swiss, again, there's no targets anywhere on this thing. US dollar Swiss, it's the most erratic thing in the world. As you can see, huge collapse and then recovery on this. This is what it does. It goes up and down really fast and hard. When the Swiss franc moves, the Swiss franc really moves. So, which is why a lot of people don't trade the Swissy, because it's a bit too violent. But at the moment, there's no directional bias at all. So we're going back to December here. So this is basically the whole of this year. We're not going anywhere, just up and down. So take it any way you want, but be prepared to get into a very strong move. Risky pair to trade, US dollar Swiss. From a buyer's perspective, as you can see, falls bang in the middle. Yeah, so the fundamentals are good because the Swiss franc is always good. The only thing we've got is the COT position is long on it. So let's see. But yeah, RSI extensions, same as everything else. Gold is a cross with the US dollar. So is the US dollar going up or down? Just trade it the other way. You've got to look at these targets to the downside and say it's coming down, which means we're going to need a strong US dollar. So we've had a lot of money coming into gold. Basically, it's a safe haven. Whenever we've got any trouble with anything, we get money flowing into gold. So at the minute, I would say, yeah, I want to be shorting it because at the moment it looks like everything is getting sorted out with all the banking crisis. So the money should flow back out of gold. We've had it all flowing in, so now it should all come out. Targets to the downside. So if you're looking for shorts, you had a reversal alert there on the hourly, which was a new low there. So that was a lower high. So looking for a lower low if market structure is going to hold to the downside. At the moment, if you look at the sentiment on gold, it is 58% long, short, 42% long. In the futures market, they are long on it. Yeah, so gold, I thought gold was a long, is it not? I might be wrong. Yeah, 75% long. So yeah, it is a long. So I'd be looking for shorts on it really, but they might come out and take the highs first. But it's balanced, isn't it? It's mixed. That's why we're going sideways at the moment. There's no reason to long it or short it. It's going to go flying up or down when we get the next US dollar news. So either or. And oil, still profitable, which is good. So I took the break here. That's where I got in long. So we pushed down into this propulsion gap. So what I was looking for was a retracement on that move up into there. So I got in long here, and I'm looking to get out up in this blue area here, which is this support here. Yeah, so that's my exit, just in case we are going to continue down from here. But I can't see, I think there's a much higher probability of oil doing that now at $65 a barrel than there is of doing that, because $65 a barrel is very, very, very cheap. You look back, since the Ukraine crisis, yeah, what we were doing was pushing back up into this level. Oil price was going up, demand was going up, and supply was restrained. So it was a continuation long. Ukraine happened, and obviously it flew through the roof. So we're just returning basically now to pre-Ukraine levels. And I would expect us now to continue to push back up again. So that sort of movement. The market has forecast 107 a barrel, which was up here in this, funnily enough, in this propulsion gap. Yeah, but then they reduced targets down to $95 a barrel. But either way, still up, isn't it? So unless we have something dramatic changing with oil demand and supply, I would be looking for longs on that one, which I'm in long at the moment on it. So there we go. Gap fill's done on the DAX. Who got in short? Show of hands. So opening range breakout this afternoon, this morning was your pre-market. That was your 5 minute. Straight down, gap fill, done. So from here, it's either going to go up or it's going to go down. Don't know, but the gap fill's complete. So if you look at it from a targeting perspective, whoops, don't want to do that. From here, we'd be coming down to look at yesterday's low, or we'd be going up to look at the last week's high. So there's a long way to go. We're bang in the middle, 50-50 shot, flip a coin. However, if you're going to go with momentum, for sure. There we go. Covered everything. Wow, look at the euro yen pullback. Yeah, that's pulling back. Afternoon, Jonathan. Afternoon, don't remain a tadpole. Have you seen John Wick 4 yet? No, I haven't. Not yet. Not yet. Why, when I execute a position, for example, one lot size, why to divide into 5 or 10 positions? I have no idea, Yemen. I don't know. Martin, such an incredible stream. The knowledge and overview is brilliant. Cool. How's the trades going today? Pretty well. I like these one-word answers. Makes my life easy. Hit the like button. It's free. 128 here and only 57 likes at that time. We now have 133 people and 62 likes. So it's a little bit of an increase. I'm happy with that. Did something right. 6 trades, all green, 2% of bankroll up. Franco, good job. End of my day, all closed on the job tonight. Don't want to get greedy. Good man. Nice few dollars on the DAX. Cool. Excellent. Could you look at NAS again? I haven't looked at NAS. NAS is this afternoon, Umar. Don't trade the NASDAQ in the morning. Big drop this morning. All doing the gap fills basically, aren't they? So just doing the gap fills this morning. We'll look at the NASDAQ this afternoon, trade the NAS in the afternoon. Right. Keep an eye on the DAX. Still like it's short. I might get pullback and then drop. There's no real targets either way though, is there today? At the moment, we've got some upside there. Yeah, I mean, there's a target up here, just above yesterday's high. There, target. Look. Why did you do before being a trader? What did I do before being a trader? I was a programmer. I ran a web design company. I say I ran a web design company. I was a web designer. EuroCAD. What are your thoughts on EuroCAD? I've done all the analysis, Babs. You're a bit late. Compounding. Yeah, we're going to do that in a second, Franco. But DE40 RSI is overextended to the downside. I don't pay any attention, Virginia, to RSI when I'm scalping. Scalping indices, you go with momentum. Momentum is down. Yeah. So look at that. Do you think the RSI was bothered when that came down? No. Not intraday. You can do it. You can use it. So basically what you're saying is RSI is extended to the downside. So here we go. Let's look at it. Look. It's not quite there yet for me, but if it was, just had the German IFO climate 93.3 on a forecast of 91. So that's positive euro, negative index. So yeah, if RSI is extended to the downside on the 5-minute, then you're going to get a pullback. But I would go in the direction of the momentum. Yeah, RSI extended, pullback. RSI extended, pullback. RSI extended, embedded, pullback. So all I would use the RSI for, if I was using it on a 5-minute time frame, is to tell me when maybe to get out of my positions or put a trading stop on them. But I don't use it for scalping at all. EuroCAD, yeah, so EuroCAD, I mean, it's just, at the moment, you're getting ready for a long. We've got targets to the downside here, look. So we've also got an upside target that's already tested, but don't know, really. Don't know. Honest answer. It's not set up for me, is it? So you know how I trade. If that ain't down there, I ain't getting in. Tis to you too. An hour in and only one bro and one gold. I know, it's good, isn't it? Thanks. Spell check. Okay. Did you tip the shampoo girl well? I didn't get shampooed. She just cut my hair. I do my own shampooing. I don't want anybody getting that through my hair. It's embarrassing. You know, it's nothing. It doesn't matter what I do to my hair. It looks the same now. That's the whole point of it. I can't be asked. Would you let the market EA go 24/7? I would. Yeah. You can't do anything else. You got to run EAs 24/7. You don't know when the trades are going to need to be taken, do you? That's the whole point of it. Right. We're going to do this session on compounding in a sec. So, for those that don't know, the market reversal alerts EA it was designed and built for position trading. The problem with position trading is you're only going to say it's the problem. The problem with position trading is you're only going to return somewhere around 10 to 15% a month, which is a problem for most people because everybody wants a Lamborghini. So compounding basically is the only way you're going to grow an account to a size that you can position trade with. So I'm going to do a session on basically compounding and actually using the position trading strategy to do the compounding. Yeah, so that's what we're going to do. I'm going to look at that. We'll do some tests in the EA basically. So, but is there anything else anybody wants to cover before I do that? Anything pairs wise? I think I've covered everything, haven't I? So if there's anything you want to look at really in detail, we can go through the replay. But I think I've covered all the pairs and the DAX gap fill's done. So there you go. 15% a month, you can run a hedge fund on that. Yeah, exactly. How do you think the hedge funds trade? Do you think a hedge fund uses a stop loss? Okay, right. So we'll get on with the compounding bit then, shall we? Right. So compounding an account from a small amount of money to a large amount of money, basically, is the only way you're really going to get a big enough balance to do proper position trading. So the downside to position trading is that you're only going to earn in a region of somewhere between 5 to 15% a month is a normal return. A 15% is a pretty standard return, 10% average. Occasionally you're going to get the 20-25% months, okay? But the vast majority of the time, if you average it out over a period of a year, you're going to return somewhere in the region of 10 to 15% a month. So if you wanted to earn, I don't know, let's say 5K a month, yeah? You've got to have a 50K trading account. Yeah, so most people, when they come into this job, they haven't got a 50K trading account. Some people come in and they have, and that's fine. You can go straight into position trading from day one. But if you haven't got that sort of money, you're going to need to build it up. And I get asked the question in Telegram and in the MQL5 marketplace all the time. What's the minimum balance for running the market reversal alerts EA? Can I trade with $500, $1,000? $1,500? And the answer is always yes, of course you can, but don't expect to make a lot of money. If you've got a $500 trading account, expect to get $50 a month. Can you live on $50 a month? Some people in certain countries, that's probably absolutely achievable. For the 90% of us, $50 a month is basically a meal out, isn't it? So, so you've got to be able to grow your account from a small starting point. So the only way you're going to be able to do that is by compounding, and compounding is incredibly dangerous. So the only way, thanks for the follow, whoever that was, Sad Taste, welcome aboard. So the only way you're going to grow your account through compounding is by taking high risk. Yeah. So if you've got a $500 account, yeah, as your starting balance, and you need to grow that up, you're going to need to put some decent risk into the market. Yeah. So even if you think about it, if you were to say, I'm going to risk 1% per trade, right? And I'm going to go for a 1.5 are on my trades. Yeah, you're risking $50 to make $75. How many $75 have you got to make? Sorry, 1%. $5 to make $7.50. So how many $7.50 have you got to make to double that account? It's going to take a year. So realistically, you can't do that. So you have to use higher risk. All we're looking to do when we're growing a small account into a big account is we're looking to do a very short-term, high-risk strategy. So we want to take this $500 and we want to turn it into 5,000. So 10x it. Yeah. To do that, you've got to use a decent amount of risk, somewhere around about 5 to 10% on a trade. Yeah. If you are position trading, if you're using a stop loss based strategy to compound it, you could use a higher risk. You could go with something like 15% or 20% maybe, or even higher if you wanted to. Let's face it, if you're flipping a coin, right, and you risk 50% of your balance on each trade, you've got a 50-50 shot of getting a long or a short right, haven't you? Yeah. And if you go for a very small risk reward, like a 1.5R or even a 1R on every trade, if you've got a $500 account and you get 2 trades that win in a row, you've doubled it, haven't you? You've trebled it. So it's achievable. But what you want to do is have half a chance of making it work. And that's the difference. People blow these small accounts because they're trying to get to too much money too fast, and it's too difficult to do. So what I'm going to show you is a way to position trade and compound at the same time to grow an account to a level where you can hopefully then drop your risk down to proper levels and start earning some money from it. So the risk we're going to use is going to be small in regards to normal compounding strategies. So we're going to be using no more than around about 5% of the account balance for each particular trade. But what we're going to do is we're not going to use a stop loss for the strategy. Okay, so we're going to use our normal position trading strategy, and we're going to scale into these positions when they go against us. But there is a very high risk if you get in at the wrong time and you happen to pick an instrument which goes into a squeeze that this isn't going to work. So I'm going to show you quickly a back test running with the market reversal alerts EA on the pound US dollar. And then we're going to look at how we can pick instruments which are going to be more probable that this type of strategy is going to work on. Yeah, so we're looking for stuff that is going to mean revert as much as possible, but still have decent movement in it. But we want to pick something that isn't going to squeeze really, really hard. Yeah, so obviously the bias scorecard is the thing, you know, to use for that, or we can use retail sentiment. So we'll look at ways that we can increase our odds. But if we start off, I'll just go over to the market reversal alerts EA. So what I've done is I'm using the pound US dollar on the hourly chart here. Okay, so we're trading a higher time frame. We're not doing that. We're not trying to do this on M5. We're not trying to do this on chop because the odds are a lot lower. We're trying to do it on a time frame that is actually going to give us half a chance of making this work, right? So what I've done is I've set the EA up. Let me just make sure that's all in the screen so we can see it. Okay. So I've set the EA up basically to trade in both directions. Yeah, long and short. We don't care. We're going to try and pick mean reversion or range bound instruments to do this on. What we're doing is we're risking 5% of our account balance on every trade. Yeah. So if you think about it, we get into a trade. Let's say what should we do this balance? It doesn't matter what the balance is, does it? We're basically looking to double, treble, and build this account up. So it doesn't matter if it's 100K or 10K, does it? It's irrelevant. It's the percentage return that we're looking for. So we're looking to risk 5% of our account every time we get into a position. I'm using ADR on this with a stop loss at half an ADR. So it's exactly the same as the normal strategies that I trade. But we are putting our risk from 0.25% up to 5%. So it's a big risk. Risk of ruin when you're risking this sort of amount of money with or without a stop loss is very high. Yeah. So you can only do this with money you can afford to lose. So if you have $1,000 to start trading with, this either works or it doesn't. And you have to accept the fact that this is probably going to go. 60% of traders lose 60% of their account in 60 days, or 90% of traders lose 90% of their account in 90 days, whichever statistic you want to believe. So this is totally normal, isn't it? We're used to this as retail traders, blowing accounts. That's what we do. But what we're going to do is give ourselves the chance of making a serious return if we're going to have a chance of blowing this account. So we're going to use high risk. So it's 5% per entry. We are not going to use a stop loss. So we're going to calculate our stop loss using 5%. We are using a fake stop loss. So as soon as it takes that entry, it's going to remove that stop loss from the market. We're going to scale into our trades. Okay, so we are going to position trade. We're going to make sure that the distance between the trades is at least 1 ADR, yeah, which is going to be 10% drawdown on our account. Yeah, so we're risking 0.5% on half an ADR's movement. What we're going to do is if it moves 1 ADR against us, which will put us into 10% of drawdown, we are then going to close out 30% of that position to give ourselves a chance of getting a second trading to get out. Okay, and we're going to take our profit at 7,500, which is in this case, because we're risking 5,000 on a trade, a 1.5 hour basically return, isn't it? Yeah. Okay, so that's the settings on the EA. It's going to scale into positions. It's going to use a lot size multiplier to scale in. So our initial 5% risk that we take, when we get 1 ADR, we take a third of that off, and then we get in with a 7.5% risk on the second entry to get us out of it very, very quick. And we're looking for 7.5, right? So this is the test that I set up just to basically prove the point. There's no higher time frame in RSIs, but what we're saying is we want to get in on our existing time frame, which is the hourly, with an RSI extension of 75 or 25. If you use 80-20, yeah, you're going to take less trades, but you're also going to have probably a higher probability of going into less drawdown. But we'll run this anyway just to show. So that's the settings that we got set up. It's on control points at the moment. Yeah, so I'm just going to set that running. So what we're looking to do, don't forget here, is we're looking to grow our account. So if we started with 100K or whatever we start with, 1K, whatever it may be, our goal is to double this account. Yeah, and then double it again. And then double it again until we've got to a point that we can actually use to pay our bills, pay our mortgage. We've got to be able to get this account to a size that we can actually make some decent money on, right? So what this risk profile is going to do is going to give us a high probability of returning the results that we want, doubling that account up, but it's going to be done with a risk that will allow the market to fluctuate and move. Yeah, so we're not going in with 30% of our account. That gives us 3 trades. One position trade goes wrong and goes against us, against us, against us. That's it, we're out, account blown. So you've got to keep the risk still within a decent parameter, and 5% is a decent amount to use. And as you can see from the results on the screen, it works very, very well. This is on the pound US dollar. So again, some instruments, you're going to blow this, yeah? And it is very much a case of you need everything to line up in a row when you do this. It's the same as a proper valuation. If you start a proper valuation on Monday and you take 5 trades long and every single one of them plummets, you've blown the account, you've blown the evaluation. If you take this approach on an instrument a week before it goes into a squeeze of 5 ADR against you, you're going to blow the account. This is risky, it's high risk, but it's also high return and high reward. So it's a way of getting this account up to the level that you want it to be. So as I said, this is 100K account. It doesn't matter what you start with. What we're looking for is what's the return over a period of time when we're doing this, yeah? So that's the result. There's all the trades that it's taken. And as you can see in here, we're making 7.5, 8 grand per go. Yeah, so we started off with 100K, closed the position at 100,000 and 7,940. Then we grew it up to 12-ish, 13, 14. Yeah, so we made 14% 15%, 16, 17, 18, 19, 20, you get the point. It's going up by about $7.5 to go, yeah? So looking at the report, we returned $360,000 off of our initial 100,000. Profit factor is 3.97. Drawdown 61%. Yeah. So what you are having to do if you're going to compound an account, forget drawdown. It's irrelevant, right? This is either going to work or it's not going to work. So whether this thing draws down 10% or 90% on our account is irrelevant. What we're looking to do is double and double and double. Yeah. Doesn't matter what that is. Okay. So forget the drawdown. It's not going to be pretty to watch. Yeah. So you're not going to have fun doing this. This is going to be going to sleep in 30% drawdown on your account, waking up thinking, is this going to be 50, 60, 70, or has it just banked $7.5 or 7.5%? Yeah. So you can see how many trades it's taken. Strike rate is 79%. So high strike rate, as you'd expect, it's a position trading strategy. So putting this into an analysis, here's one I made earlier, right? This is the back test done. Okay, so you can see that the return on the account is, where's it gone? 360,000, okay, profit off of 100,000. So yearly average return is 332%. Yeah, so we've trebled our initial starting balance in a year. If you look at it on a month by month basis, yeah, we're going to return in the region of 30% a month doing this. 25%, 25%, 35, 30, 35, 35, 35, 50, and then a little bit to finish off. Yeah, but basically that is a 3x return. Okay, so that is how you can grow a small account, but you're gonna run a very high risk of ruin with this. It is either going to work or it isn't going to work, and you're not going to know that when you start. It's the same as every other trade we ever take on any instrument, isn't it? Yeah, when you hit that button, regardless of what the conditions in the market are, the odds of that trade working or going in your direction is 50-50. It always is a 50-50 shot, regardless of whether you think it's increased by that being there, trades only being taken at that particular level, the wind blowing in the right direction, a coin flip, whatever you say, it's a 50-50 shot. Every time you press the button in a compounding based strategy, the odds are the same, except the risk is way, way, way higher. Yeah. So that is 5% risk per initial entry. And then we are putting a slightly larger position size on and scaling out as we come down. So if we have a look at the trades that this strategy's taken, you can see that there's losses in there along the way. We're taking loss. There's lots of little losses in here. Yeah. But these little losses are all outweighed by all these profits. Yeah. So there's lots and lots of profitable trades in there. And as you can see, the cumulative return here, we started off, first trade worked, which is brilliant, in, out, done, 7% or 7.94. And then it basically just goes up and up and up from there. So we went up to 17, 24, 20, 31, 27, 37. So if we go down to 100% here, this is us doubling our account. Yeah. So we've taken whatever our starting balance was and doubled it. We started in January, and in June, we 2x the account. So this is 6 months. Okay. So everybody's now going to be saying, 6 months? I can't wait 6 months. In 6 months' time, if you had a 5K account, you've now got a 10K account. Your return is doubled. But if you had a 25K account, you've now got a 50K account. So the question you've got to ask yourself is, what have I got to start with? And what do I need to pay the bills? Assuming I'm going to get a 10% return on my account. So if you have got enough, you haven't quite got enough money to trade with, this approach will get you to where you want to be fairly quickly, and then you can start doing it properly. If you've got a tiny amount, like $1,000, and you need $30,000, right? What you can do is try maybe a 10% risk per trade rather than 5% risk per trade. But again, go in the back tester and back test what would have happened and how fast things would have gone. But 6 months to double the account. And then if we go down to wherever we are, 16. Oh, sorry, that's not right, is it? I was looking at cumulative percent. Sorry, hang on one sec. Cumulative P&L. Sorry, I'm looking at the wrong bit, aren't I? Yeah, so we made that in 5 months. So it's not far off, is it? But yeah, basically you can see obviously what you're going to get. It's going to take somewhere between 3 to 6 months to double the account. So that's a 5% risk. If we run that test again, but this time we put that risk initial percentage up to 10%. Yeah, so a lot more dangerous, 10% risk per trade. And we'll start that off running. I'll have a look at the graph. So again, this is a 100K account. So we've taken 6 trades. We're up to 161K, 169K, 180. One more. Are we going to get it? There we go. So that's doubled in 15 trades, blown. Yeah. So you see the difference between 5% and 10%. Blown, doubled, trebled our account in a year. So when you are doing this, if you continue to do it, you will blow your account, regardless of what you get up to. There will be a point in time where whatever strategy you're using, whatever trades you're taking, there will be a point in time where you will hit a losing run. And that losing run will blow the account with high risk. However, if you used that 10% risk and gone fantastic and stopped there, and then used that money now with a proper risk to start position trading, you're fine. So the point I'm trying to make here is there's no way you can just jump in with a small amount of money and suddenly go bang. And the danger you're going to find is if you risk too much, you are going to blow the account doing this. Even if you use a stop loss strategy, if we were to use a 0.5% stop loss based strategy, you'll find it will do the same thing. You'll have a losing run of 5 to 10 trades, which will wipe out everything that you have made, regardless of whether you're using a 1-to-1, 1.5R, 2R, whatever your risk reward is, you're going to get a losing run in every strategy. Okay, so so there you go. There's a 10% which blew it. You can try different things in here if you want to, but what I found when I was doing this experiment was if you're going with something like a distance pending order, that's not right, a 5% risk, you've got a high probability of staying in the game and having it work for you. Another thing you can try as well is 10% risk, but getting at a deeper extreme. So let's try that with a 10% and an 80-20. Again, higher strike rate with a higher risk, but we're also going to need a higher return. Well, so let's go to 12,500 as our reward because we're getting in with 10%. So you can try a higher extreme on the RSI, which means that the price has moved further. So that blew quick. Look at that, straight out. Again, unlucky, obviously, on that first trade. Yeah, too much risk. Look, far too much risk straight away. So let's drop it down 5% again and use that 80-20 level. Don't forget, you're going to take completely different trades with 80-20 than you would have with 75-25. So again, what happens in this back test is not necessarily going to be repeated in the future, is it? But you can see how the compounding works, which was the point in doing this section, is to show you the possibilities. This one's going to take a lot less trades with the 80-20, but you'll also experience a lot less drawdown. So we'll see what this one comes out at. Thanks for the follow, IGT. IGT, welcome aboard. Right, so that was basically the compounding session. That's how it works. So anybody got any questions on it? or any ideas about things to do with compounding? Aussie dollar, US dollar, sales in session. Possibly. Are you going to trade or not? Yeah, constantly. This is your first time in here, I guess. Sad, isn't it? There's some trades running. Yeah. 1% bank this morning. That's what's open. We had a nice DAX short today, which did the gap fill. Done lots of trading. That's what I do all day long. That must be stressful AF. Yeah, it will be. But there isn't another way. And again, I've said this a few times in here before. If you want to trade for a living and earn money from it, you've got to have capital. Yeah, you can't set up any business in this world without capital. If you're setting yourself up as a service-based industry, like a web designer or a solicitor or whatever, an accountant, and you're offering a service to people, you need to tell people about it. So you need a marketing budget. You need an office, a computer, a desk, and maybe some staff. You need starting capital. If you want to train to be a doctor, you need starting capital to go through 7 years of college. If you want to become a pilot, you need £100,000 to do your pilot's exams and all the flying hours you're going to do. Yeah. If you want to become a trader, you need a starting capital to be able to put risk into the market to extract the money back out again. It's the same as any other job. If you want to get that starting capital and you've only got a small amount of money, that's how you do it. But it's not going to be pleasant. So there you go. That one was 229,000 return, 42% drawdown. Yeah, that's using 80-20. You took a lot less trades there, didn't you? A lot less trades. But, you know, you might as well use 75-25. Actually, I had the target set a bit higher there, didn't I? So, and again, you can do different targets. If we went with a 1-to-1 ratio, let's see what the results would be with a 1-to-1. Again, all this stuff you can do in backtesting, but you see how it works. I did a little different twist, added dollar monthly I could afford to lose. Yeah. Yeah, I mean, ads, it's all to do with the money you can afford to lose, basically. So what level of leverage would you need for that account? Probably 1 to 200 would do. 1 to 500 doesn't matter. You need to be able to get all the risk on. Yeah, so I Robo Forex with a 1 to 500 account, you can basically risk every penny. You'll get stopped out at 50% margin. So, Sahasha, how can you encourage people to trade without a stop loss? Because it works, and that's how the banks trade. Go and watch the bootcamp. It's all on the website. It's all free. Go and watch the position trading bootcamp. That'll explain how the banks work, how position trading works. I think what you're thinking of, Sahasha, is encouraging people to trade without a stop loss, risking ridiculous amounts of money. I risk 0.25% of my account on every trade. So if it goes against me by 4 ADR because there's an earthquake or a war, worst case scenario, I might lose 1% of my account. So I trade small risk, no stop loss, because you get stopped out if you use a stop loss, which is why you're here, because if you were a professional trader, you would be trading, wouldn't you? So yeah, go watch the bootcamp. How many times do I get asked that question? No stop loss gang. I'm going to get t-shirts printed, no stop loss gang. Oh, guys, have you seen my merch? I've started a merch store. I won't do it now. But yeah, it was amusing. I did over the weekend. I was bored, so I went and set up a merch store. It's amazing what you can do on the internet these days. Look, you can buy a Candles logo penny. Brilliant. There you go. Look, market structured trader merchandise. It took me about 10 minutes. It's very amusing. Right, that's finished. 97. So we only doubled the account. 21% drawdown. Look. only doubled the account. We took 21, so that's a little bit more manageable, isn't it? But if we drop down to the, let's try 70-30 as well. We better off using a positive R return, aren't we? Really, doesn't really matter. He isn't encouraging anybody. He tells us what he's doing. Oh, that's good, Anna. Good answer. I'm going to remember that one. For compounding, we need to trade a few pairs only. Yes, sorry. So that's the other bit that I was going to talk about. There we go. Blew that one. Look. Dangerous. Yeah, so to increase your opportunities, obviously, of this working, if you're going to do it, you're going to need to pick pairs we know are not going to fly in one direction or another. So we need stuff that is unlikely to be squeezed. So our best range-bound opportunities. If you're going to get onto something like New Zealand dollar, US dollar, which is a massive sell. Yeah. And this thing decides to go, i.e. we get some more negative New Zealand dollar news or some more positive US dollar news, you're going to get into a squeeze. That's not going to work. Not going to work, is it? If we get into a squeeze as position traders, we don't care. We just get out on the pullbacks, don't we? But yeah, I mean, you've got to pick something that's going to be range bound as much as possible. So when you're looking at the bias scorecard, anything that's got no cop bias and has got neutral fundamentals, like Aussie dollar yen, for example, at the moment, actually not a yen pair, I wouldn't pick yen pair at the moment, but something like pound New Zealand maybe. If we're picking stuff that's meant to be ranging because there's no bias in one direction or the other, that's going to give us much better chance of the trade working out, isn't it? So so you can use that. The other thing you can use, obviously, is combined sentiment. So what we want to do is get into trades when we know there's more chance of it working for us. So you could say, I'm only going to go long on the US dollar CAD, the Euro New Zealand, the Euro odd, and I'm only going to go short on the Aussie US and the New Zealand US. Yeah. So you put the market reversal alerts EA onto these pairs only in those directions. The other important thing, if you're going to do this compounding, which is again high risk as a strategy, which is why I say it doesn't work. I say many times there, it doesn't work, does it? It can work, but it's lucky. If you're going to do it, you're not going to be able to do it on more than one pair at once. If you do it on 3 pairs at the same time, and all 3 of those pairs go into drawdown by 1 ADR, you've got 15% risk on the initial positions times 2. You're in 30% drawdown by 1 ADR move against you. It's not going to work. However, if you do it and all of them go in the same direction at the same time, you're going to increase your account by 25%, potentially. Gambling, isn't it? Compounding is gambling. If it's done in this way, if it's done as a grow your account gradually over time, which is what we do normally, then it's fine. But you know, it's very, very dangerous. You just need to be aware of it. But it is doable, and that's how you would do it. For compounding, we need to trade a few pairs only. Yeah, Venka, as I just said. Yeah, correct. About to start a 10K My Forex Fund prop. What do you recommend as a risk per trade using the market reversal CA? Thanks for the follow, Bile. Welcome aboard. So if you're going to position trade it, I would going a little bit higher than normal, maybe around 0.5% on half an ADR. I don't know what the strategy is that you're going to do. But I mean, if you look at the drawdown that we're achieving, I mean, all of these accounts that are running here. So this is the ADR reversals. This has done 24K this month, which is an exceptional return, not normal. This has been in over 5% of drawdown open, but it's been banking constantly. So whether or not it would have triggered, I don't know. And it depends, doesn't it, when you start? Yeah. If you get to 4.75% drawdown and you've banked 8K and then you wait for all these just to go back to 0, you've passed. Or whatever your target is, 8%, isn't it? So I always call it 8K because I'm trading 100K accounts. Yeah, it's 8%. So yeah, that's fine. Your H1 mean reversion has done 12%, sitting in 3% of drawdown at the moment. This is on the normal risk parameters as well, 0.25%. So I don't know whether this is going to go up or down this drawdown today. If you're on prop, you want it to go down. I don't care because I just bank along the way. And the H4 mean reversion's done 6%. But H4 mean reversion, you're very rarely going to get into drawdown on it of any depth if you're trading the H4 at the moment, because the market's just so flat. But that wouldn't have passed an evaluation this month, would it? There's no answer to that, really, Steve. It's a question, what's the market going to do when you enter? I don't know. You're either going to pass it or fail it. Pull back on the DAX from the gap fill is around about half the move. So we might start to see a little bit of short selling coming in now. Tim, if you watch the bootcamp and note how he controls drawdown, you will see he does not encourage what you say, rather he teaches us how to trade without being able to predict timing. Correct. Really like the way you teach. Cool. Total profits in GJ. Good one. Well done. How do you know how the banks trade? You don't have the capital and institution tools like the banks, man. Every trader who trades from home is a retail trader. Yeah. Oh, you've got a bit of a cob on, haven't you? So, Harsha, before you say anything else, go and watch the boot camps. Go and look at the 450 daily live rooms that I've run in here, showing my profit, my trades on a daily basis, and then come back and hopefully you'll understand. I can't be bothered to explain it. I'm not going to argue with you. Sorry, coffee mugs. Don't buy coffee mugs. Don't buy anything from the shop. It's a con. It's not a con. It's just really expensive. Shipping is $8.99. But if you really want a market structure trader cap, I will buy some and we'll do some giveaways or something. I don't know. It was a joke. I literally, my kids said to me, we were looking at the analytics basically on the live room and stuff, and the fact that we're up to sort of like a couple of hundred people at the session at the moment, and they were like, "Oh, you're a YouTuber, Dad," and I was like, "You need merch." I was like, "I'm not really a YouTuber, am I? Because YouTubers usually have hundreds of thousands of views and earn lots of money. I don't earn hardly anything. Not put it this way, I could go out for a couple of meals a month, possibly, in a all right restaurant. That's how much I earn from YouTube." But the kids were like, "You need merch." So we Googled YouTube merch store, and we found this place basically, and all you do is you upload your logo and they just create a store. Literally, it was up and running yesterday afternoon. We started yesterday afternoon. It's that simple. So I've ordered some t-shirts and stuff, so that'd be amusing. But yeah, I only set it up as a laugh for the kids. But if you do want to buy some merch, go and buy it. I earn like about £2 or something every time I sell something. Just get up the markets, breakout 1-to-1, that's it. You can do that as well. There's so many ways to compound. You know, compounding is a very dangerous strategy. And the trouble is you've got to know when to stop, right? You've got to set yourself a target. So if you've got a 5K account and you need to get it to 30K, you need to stop when you get there. The trouble is, if you get a 5K account grown to 30K, suddenly you're thinking, do this on a regular basis. I've just shown you in a strategy test, you can't. At some point, that's going to go pop because you're risking far too much. So if you're using a stop loss based one, again, you can do it with a stop loss as well. We could try the stop loss actually as well. See what that does. Got half an ADR with a 7, so with a 3/4 ADR, I think you'll probably find this won't work because there's not enough risk reward on it. But we'll try it. Let's see. Can't remember what settings I've got now. Again, do this on prop. Pass, fail. In a minute, it'll go like that, and we'll get a pass. And then we'll get another fail. Pure luck. What's the market doing at the time? Put it that way. Brian, incoming. Gold. How's gold going this week? Gold. Hang on a minute. It's a sell. It's a sell. I got it. It's a sell. Gold is a sell. Yeah, it's a sell. Gold is going parabolic to 5,000. There you go. Get it. He's got a crystal ball. He knows where it's going. Follow him. I have now officially joined the Matt Lambo mob. Mr. Commercial. No, I haven't. Gold. JP Morgan said to buy it. JP Morgan are holding for a long time. So if you're going to hold it for a long time, then fine. But it's fine. Is the lot size multiplier required for recovery? No, it's not. So you could, again, you could do that test without the lot size multiplier. See that it's not. Look what happens when you use the stop loss, everybody. Ugh. Our friend Mr. Singh will be going, use a stop loss any minute. Sorry, you probably don't make that noise. It's a weird noise that was, wasn't it? Yeah, so if you don't use the lot size multiplier, you're just going to find it more difficult to get out of the positions. So there's no right or wrong with it. But if we use a 1 multiplier and 75, 25. So you probably just find that, I mean, it might make no difference. Your drawdown will be less. But don't forget we're scaling out of these positions as well. So we'll see. We'll see how that runs without the lot multiplier as well. Ratib, finally see your face. No. A couple of meals a month is still a touch. Yeah, a couple of meals a month is good. Half the risk when you've doubled the account. Yeah. Well, when you've got to where you want to be. The whole purpose of me doing this video is to show you how you can do it. Yeah, this can be done. You can double, triple an account. I'm not saying you can't. What I'm saying is the Lambo guys sell you the dream of doing this. But what I'm doing is saying you can do this to get yourself up to a size where you can position trade. And if you can get yourself to there, you can feed yourself for life. That's the thing. Because you're just able to trade with small risk and keep yourself there. It's trying to get yourself there. This is what everybody's. I have it all the time. This is what prompted me to do this little session this morning. Was I get asked constantly, "I've got $500. Can I position trade?" No. I don't know. How much do you need to earn? $5,000 a month. What makes you think you could position trade with $500 and make $5,000 a month? It's just ludicrous. It's not going to happen. If you want to make $5,000 a month, you're going to need something like 50K. So can you get that $500 account to 50K? Not very easily, can you? But you could get a 5K account to 50K. It's going to take you a year or so though. Yeah. There's no fast tracks at all. The Lambo crowd will tell you you can double an account. Yes, you can double an account. I can double an account. I'm showing you right here. This one is quadrupled before our very eyes. Anyone can do it. You won't be able to do this for long term though. This is the thing. You can't do this long term. 358k profit, 55% drawdown in a year. But you'll be going to sleep at night for an entire year crapping yourself. Either that, or go and get a bank loan to start a new business. Tell them it's a trading education business. Ta-da! Use it for trading. No, don't do that. Lie to your bank. You'll be in massive trouble. I'm trying to set the EA4 demo account and I get this. Please set backtest mode to enable. Anna, you need to set backtest mode to enable. So you are in MT5, aren't you? I haven't got an MT5. Hang on. Hang on. Oh, this is going to ask me to restart my machine because MT5 will update because it's awful. Whoa. So what you need to do is in here, in your inputs, yeah, you have there, backtest mode. You see that? Yeah, backtest mode is disabled. When you're doing any backtesting with the MT5 version, you set that to enable. It's a technical reason. I couldn't get this onto the marketplace in MT5 because the way the uploading process for EAs works is they do multiple backtests with your EAs to test they work and test the logic, test the basics are there, and they're all there. However, what they do is they randomize some of the inputs. There we go. And I don't want to update. They randomize some of the inputs. The problem was that it would randomize the inputs in such a way that the thing would never take a trade. So you can never get your product into the marketplace for people to get. So I had to set this one up for MT5 with this mode, which is set to disable, which means that this is trading mode. That is backtest mode. That's why. It's a pretty good backtest, isn't it? I like that one. That was using one on the. Oh, sorry, stop. That was using the one lot multiplier, wasn't it? And again, look at this. Should we try this? Let's try martingale. I haven't done this for a long time. Should we try martingale? What do we reckon? Are we going to blow it or are we going to do it? Martingale. He doesn't use a stop loss and he does martingale. Watch the viewers plummet. Don't do this in real life. Unless you're happy, 100% happy to lose the money at some point. Watch this quadruple this account in 5 minutes. I'm trying to set the open WMJ. I've done that one. Yep, get it. You are the gold man now. I will bow down to your gold experience. If gold is going to 5k, I believe you. 5k is miles away. It's not going to 5k, is it? Look, that's off the chart. Do you think the institutions are trading using zero stops? Yeah. I know they are. I know people that have been in banks. That's scary to me. A grid martingale system blew an account for me once. Yeah, it will do. Don't use grid systems and don't use martingale. Ever. However, I'm just about to show you what happens when you do, and it's probably working, isn't it? Annoyingly. Yeah. Using strategies with dynamic stop loss TP settings. For sure, they'd be trading on the 1 minute for that 5-10 pips in and out. Yeah. Banks are getting in thinking, let's put a 10 pip stop below the last low. Yeah, they're not. I think most people get more chance of turning the 50k account into 500. So there you go. This is martingale. Yeah. You saw it here first. The EA that trades martingale successfully for a year. What's our return? I'm hopefully going to prove a point here. Hopefully. And hopefully the point is going to be that this will not return much more money than non-martingale. There we go. 365k return, 74% drawdown. The last one we did with not using martingale, using the same lot size for every entry, returned the same amount of money with less drawdown. Martingale is just pointless. Don't use it. Pointless. For position trading, obviously. And don't forget, the reason this is working, yeah, is because we're doing drawdown control. We are still using an exit strategy, yeah? So, Mr. My God, how can you teach people to trade without a stop loss? We are getting out of the positions, yeah? We don't just get in and go, please go up. We are actually managing risk. Mr. I've not watched the boot camp. So yeah, there's your martingale version, and your non-martingale version was pretty much the same, wasn't it? Pretty much the same. So that returned 365k. The non-martingale version. So remember, 365k, everybody, because I'm really old and my memory doesn't work, so I have to leave that on the screen. It's what you do when you get old. You write stuff down on paper all the time because you can't remember anything. So you'll see me every now and again going, hang on a minute, I've just forgotten something. Write it down. I'll get 74% is insane. Yep. Don't forget, Kidek, this is not an account we're looking to trade sensibly. This is an account we are gambling to double, treble, quadruple. That's the whole purpose of this. If you are compounding, this is what I say. Everybody that sells these compounding courses is teaching you how to trade in a way that is incredibly dangerous and will not work long term. You're going to get massive drawdown. So basically, if you've got a 5k account and you're going to try and compound it up to whatever, put that 5k on the table and fully expect it to be gone. That's what's going to happen most of the time. The times it doesn't, but let's face it, if you've got a 5k account and you want to position trade, you can position trade with that 5k account. As long as you're happy with $500 a month, that's fine. If you're not, you've got to up it, haven't you? This is how you do it. Or can do it, but I feel like for 15 to 20% drawdown is reasonable. Yeah, that's what we get as a max typically as a position trader. Yeah, I've been in the live room with 15% drawdown. That's acceptable. But we're getting there with 0.5% risk, having been in the trade for weeks and having 6 or 7 positions on in multiple instruments, all squeezing in the same direction at the same time. Not one instrument, one entry. This is super dangerous. So 365k, and we returned 358k with 25% less drawdown. Difference between not martingale, martingale. Safer, hideously dangerous, and difference in results, virtually nothing. So there's no need to be an idiot. Don't use martingale. Jonathan, there's a guy called King of Forex on YouTube, exactly the same principle. He calls it DCAing into a position. Dollar cost averaging, yeah. Do you know what the banks do? Dollar cost averaging. Hedge funds, dollar cost averaging. They all dollar cost average. What do I do? What's position trading? Dollar cost averaging. No stop losses involved. No stop, and if it goes down, he buys or sells more, then always makes a profit. Exactly. That's exactly what we teach in the bootcamp, is that? It's exactly what's... Go and watch, everybody that's new in here. If you want to know how I trade, this is how I trade. You've landed today, if it's your first day, on a lesson in compounding and why it's crazy. You shouldn't do it. We've got 95 likes. Can we have 5 more people hit the thumbs up button? Just to get 100. I've no idea. It's just a target I like to meet every day. Okay, so that's a compounding lesson done. Well, not lesson, but But I just wanted to show how it's possible to do this with the market reverse alerts EA. Yeah, and what your risk is entirely up to you. But this is position trading compounding, so it's a little different to most people teach compounding with a stop. This is position trading and DCAing. I'm going to use that term, Jonathan. DCAing with DDC. Dollar cost averaging with drawdown control. Yeah, slightly different variation, but at the same time, we are getting out of these positions. The other thing you can do as well, another test, which I haven't run yet. Let's do it. Let's do it live. Scaling out of 50% of the position instead of 30. Nah, 60. I'm going to go super cautious. Yeah. So scaling out with 60k, 60% of your position instead of 30. So we've got 358k on that previous test. Let's see what the return is on this. So this is going to be us basically scaling out of the positions faster, i.e. doing DD control quicker than normal. So we'll see what this gives us as a return. But yeah. Do you run your EA all sessions or just like, no, the EA is running 24/7. Never stops. Never stops. So running on here, this is the VPS running. Yeah. Running the strategies down here. So they're all running all the time. I don't know when the market reversal alerts. Yeah, these are the it's a market reversal alert EA. So it takes trades on market reversal alerts. I don't know when these are coming, do I? So I have to have it running all the time. I don't know when the market's going to push. It could push in Asia, it could push in London, it could push in New York. I've got no idea. So I'm in the market all the time. The EAs are running all the time. They have to be. Do you use the strategy optimizer? Oh, yeah, sorry, yes, yeah, sorry. Yeah, optimization, yeah. This is actually going to give us a better result, I think. Yeah, it is. So you're going to get better results scaling out faster. There you go. Okay, DAX just put a bearish engulfing in. So this might be the pullback. 61.8. So pending order under the low, sure. Potential, if you want to. I mean, obviously, if you've made your money this morning on the gap fill, then don't. Jesus, that return. 358. That's the same return. Same return, basically. Whether you're using 60% or not. Again, doesn't matter what drawdown control you do, it works. Mitchell, is there any major risk inside this DCA and drawdown control? Yes, of course you are. You're trading. There's always risk. Danny, currently doing your bootcamp, and when I'm ready, I will put 1,000 into an account and trade 0.25% for 5 years to see where the account is. Good man. I can show you where it will be. I can never find it. Sorry, I always have to go this really weird route to get to the signal. Sorry, that's the wrong link. There we go. So this is the H1M5 mean reversion. So there you go, Mike Mitchell. So this is the H1. So it's the hourly RSI extension M5 reversal alert strategy, which is taught in the bootcamp and is on the website. This is an EA that's been running this for 76 weeks now. Yeah, 176% return. So you asked what the dangers are in dollar cost averaging, yeah, and drawdown control. So the dangers are things like wars or catastrophic market events that send an instrument into what we call a squeeze, yeah. So when you get something like the Ukraine war kicking off, you will get high drawdown. Yeah, March 22. Yeah, you're going to get big drawdown because when you're dollar cost averaging or position trading into an entry, if it squeezes very hard and we don't get the banks doing a profit take pullback, you won't have an opportunity to get out, obviously, will you? So, so that's the danger with it. Obviously, the advantage is you bank constantly on a regular basis. Yeah. So this is running on a low. This is running low risk. This is running very low risk. Currently doing bootcamp, just covered that. Anna is laughing. I like making people laugh. It's funny, isn't it? Hi, sir. What's the DAX target? Hare Krishna, Hare Krishna. So I'm doing that. They normally have little symbols. I have nothing against Hare Krishnas, by the way. I like watching Hare Krishnas. I like trains. Downside target. Well, if we're going to continue market structure, it will be down. So yesterday's low is obviously on the cards if we're going to put a big day in, which we're probably not by the looks of things at the moment. Target the lows there. I don't know, whatever you want. If you're getting in on the short potential play here, you're going to have a stop somewhere up there, aren't you? So that's a 3 or 4 to 1, isn't it? Down to there. This is scalping you in and out as fast as you can, really, because the market will go somewhere else at some point, and you don't want to be on the other side of it. Which strategy gave you the best return over the past 12, 24 months? H4M, don't know. I don't know. They all work pretty much the same. You're going to get into a lot of trades, Baggy, which are going to be the same on any strategy used. So the 4 main strategies on the website to use with the market reversal alerts EA are the mean reversion, which is either triggered on the hourly or the 4-hourly chart. The ADR reversal strategy. Yeah, so that one there and that one there I class as separate strategies. ADRs and hedging. This is a variation of that. This is a scalping strategy, which is kind of a variation of that a little bit. So those are the main ones. They will all give you a decent return. That one and that one, you will find a lot of the time you will get the same trades triggered on the ADR reversals as you will on the H1M5 strategy, because when price pushes an ADR, yeah, so for example on gold today, if we push down to ADR and then we get a reversal alert, you're going to go long. Where will you also be? Extending on RSI. So the H1M5 will also trigger along. There's a possibility on that ADR push as well. Not in this case, I wouldn't think, but there is always a chance if it drops very, very fast, you could drop yourself down to an H4. So you get an H4, M5 or M15 entry as well. So you pick one strategy, ideally. Pick the one that is best for you, or a combination of them. But if you run all of them on every pair, you're going to massively overexpose yourself on the market, aren't you? So a big catastrophic move in one direction, obviously, is going to hurt. Please also account number and mother's maiden name. Yep, no problem. It's 123456789, and my mother's maiden name was Smith. For those of you that aren't in the UK, that is the most common name in the UK. Good luck. Is there a reason you are not running the ORBEA today? Yeah, it's running. It was a short today. I'm not running it on this account. This is the H1M5 mean reversion account. I don't know what the results are. I haven't even got it open. That's a point. I haven't got my... I need to keep an eye on my oil trade I've got running. Bear me a sec. Screen's going to go white. This is just another MT4, which I will dismiss. Oh, Jesus, what's that? Updates on MT4. What do you think about NASDAQ listing BTC at the end of Q2? I didn't even know they were. Don't know. Not something I really pay attention to much, to be honest. Sorry, one sec. Just pop that over there on the monitor. Oil. Yeah, I don't know. I don't. When I'm looking at trading NASDAQ, I'm not interested in what necessarily is going on with individual stocks or whatever. It's basically this thing goes up and down with momentum at the open. That's what I'm interested in. Not, and obviously whatever the momentum move is. So, Tim, sorry, I posted something before, but YouTube is not allowing it. Okay, Aussie dollar, US dollar, long, Guatam. Let's have a look. Aussie US. So at the moment, there's nothing extended. There's no ADRs, there's no RSIs on the dashboards. So anything you take today, I don't know what your strategy is or what you're doing with it, but there's more chance of a long than a short today, I would say. If you have a look at the combined sentiment as well, on the Aussie US, currently Aussie US retail are all longing it, so you have got more of a short bias. Don't know. Basically, we're going to come up into there, we're going to come up into there. I can say that with 99% certainty. We also have this gap fill, which got missed down here, this line here at ADR. So today, if you're talking about trading intraday, I could see an ADR hit to the downside, and I can see an ADR hit to the upside because of that propulsion gap. Yeah. So your odds today, funnily enough, the same as every other day that you get into a trade, are 50-50. Yeah. It's either going to go down to ADR to fill the gap, or it's going to go up to ADR to fill the propulsion gap at the upside. So what I would do is maybe drop down to M5 and take the first reversal alert you see. Because it's range bound, you've got two. So the last one was a long. So get in long and get out either in these propulsion gaps there or up at the propulsion gap at ADR. If it goes down to the bottom and fills the gap, take another long at the bottom and get out when it comes back up to fill the propulsion gaps to the upside. Or getting short right now, which is exactly where the reversal alert was from here, and a retest. Yeah, basically this means we're sideways. Yeah, there's absolutely no signals anywhere to do anything with anything on this pair. So if you're going to get in today, pick a direction. So either go there and add, or go there and add. Either way, you just wait for it to do its thing, and then you get out when you got profit. I'm a position trader. I don't care which way it goes, do I? Really? It either goes up or down. Oh, hang on. Tim wants to have a look at something. 1 second. I'll get you in a minute. That's cool. Thanks for telling me that. This was an interesting trade logic. I have an ORB EA that I built. Most confident in this as it has dynamic stops and profit levels, and we'll lose some. Yeah, mine is dynamic stops based on range. So, talking about common surnames, in my village here in Spain, just about everybody has one of 3 surnames. A lot have a combination of them. So they all look the same as well, Steve. Which pairs do you recommend to run the EA so we don't overexpose? Whatever you want, Baggy. There's 2 ways of handling exposure, yeah? So when you're using the market reversal alerts EA, what you can do is you can either run it on every pair, yeah? And then when you get yourself exposed on 2 instruments in the same currency, pause the EA running on the rest, yeah? Or you can pick certain instruments so that you don't get exposed. But the trouble is you're going to find it very difficult to know which ones are going to trigger an entry and which ones aren't. So it's very difficult to answer that. If you don't overexpose yourself, so for example, the this one here, this H1M5 that's been running for a couple of years now, basically. If you look at the trading history on it, sorry, statistics on it, you can see what pairs it's running on. You're running Euro US dollar, Swiss yen, pound US, Aussie New Zealand, Euro pound, New Zealand US, US CAD, Aussie US, Euro New Zealand, Euro odd, Euro CAD, and Aussie CAD. Yeah, it does not trade those yens, and it does not trade those Swissies. So it's out of the Swiss franc and out of the yen, but it's trading Swiss yen. Other than that, it gets in when it gets in. So at some times it will get overexposed. It can get overexposed to the euro and the US dollar quite badly. But this is running on auto, whereas I would manage that position myself. So at the moment, I don't think it's as dangerous to get overexposed because the market is contracted. But the problem with that is at some point that market contraction will end and it will explode. So when that happens, if you're exposed in the wrong direction, it's going to hurt. You just have to get out of those positions. So maybe take some loss. But we're also coming into summer trading in a month or so's time. So if the market doesn't explode in the next month, it's not going to explode in the summer. So it's difficult to really advise on that. But get into what you want to get into and manage it. The overexposure rule that's in the bootcamp for exposing yourself on 2 instruments at a time is there to stop people getting themselves into troubling squeezes. And if you can, stick to it. But it's hard sometimes to stick to it because a lot of things set up and look really, really good at the same time on the same instrument. Obviously, a la the yen, for example. Yeah, we've just had this big, strong push on the yen. And all the yen pairs have gone similarly at the same time. But you also have other currencies with different strengths. So some of these will come back and fill the gaps. Some of them haven't managed to get anywhere near filling the gaps. So, you know, everything's got a different strength, hasn't it, based on the other currency that's crossed with it. But there's no way to answer that question, really. I would say run it on as much as you can, but try not to run it on everything. Probably doesn't help much, does it? But look at your exposure, manage your exposure. If you're massively exposed, overexposed on something, and you look at it and go, oh my God, I don't like the CAD, close some of it. Yeah, I can get out of that New Zealand CAD by closing it now. That pound CAD is massively exposed. I can't do anything about that. That CAD yen, I can close that. That gets rid of a bit of CAD exposure, doesn't it? But you can let the EA just get you into whatever it wants to. But the trouble is you won't. So, you know, it's a tricky thing. There you go. There's that reversal entry there. You're in short. Stop. Target down there is kind of a 3-to-1 or something. Anna, I used, so I tried the EA with the demo account and I would get 1K to 1.025 euro in 3 months. I used pound US dollar. 1K to 1.025 euro. 3 months. You're talking about that test that we've just been doing in here? I mean, if let's start with a 5. Let's start with what, you know, one. Let's do a realistic test, shall we? So $1,000. So target. Let's go with a target of $100 per trade. And let's see what that does. See how that gets on with a realistic test. Wall Street shifting to Bitcoin trading adoption. Are they? I don't know. I don't know. I think it's quite possible because the Nasdaq, the Bitcoin is basically now just an index, isn't it? Really, it moves with the stock indexes, so it makes sense to include it in the stock indexes, I guess. But I don't know. I don't quite know how they value it because it's not a company, is it? So how would you include it in an index? Your mate Nirav loves a quick Nasdaq scalp at the open too, does he? Funny that. Right, Tim, round to your question. Sir, please, thank you, analyse live gutted Norwegian salmon on the Norwegian Fish Exchange. My brother is salmon trader in the Yemen. It is for life-saving operation. Urgently, thank you, sir. Live gutted. How can you have a live gutted Norwegian salmon? If you've gutted the salmon, it's dead. You can't have a live gutted Norwegian salmon. That's not an instrument. No. It's not a live gutted Norwegian salmon, though, is it? So, Nasdaq, you can trade salmon. You can trade salmon. The salmon is the salmon index. Moves quite a lot as well. Look. Salmon index 3 to 6 kilogram weighted. So you can so basically, if you took a futures contract in this, you would get 3 to 6 kilograms of salmon delivered. I'm up for that. Mind you, if it's three months old when the contract expires, not sure I want to eat it. Oh, you can trade anything. How did that do? 5,600. Right, so there you have it. We made $4,000 profit. So we took an account from $1,000 and we grew it to $4.5 grand, $5.5 grand in a year. We took 55% drawdown on it, so we drew down half the account. But there you go. We 4x'd it. Or 5x'd it, depending which one. Oh, hey, look, it's our mate again. Hey, how you doing? I'm going to get this guy and I'm going to say, oh, it's a lady this time. Would you like to come for a drink with me? And I will show you how to do exactly this thing. Yeah. Oh, God. That advert's brilliant. Love it. My commentary was better the other day, wasn't it? Position trading isn't that difficult. You just need to apply the 5 aspects explained in the bootcamp. Yeah. And then control the risk. So your view on Nasdaq, Hari Krishna. Afternoon. Come back this afternoon. We do Nasdaq in the afternoon. Nasdaq is not open yet. Well, it is open. It's the Globex session though, so you don't trade the Globex. This commercial is so fat. I know it's a bad one. That is a terrible one. Right, yeah, there you go. So there we go. We grew a 5K account, a 1K account to 5 in a year. It's all right. But realistically, let's say we got 5 grand, shall we? Let's do it. Let's do 5 grand. So let's say I've got £5,000, dollars, whatever, and I'm going for a 1% target. Let's say what we could get. So in the UK, I reckon if you wanted to make a living out of trading in the UK, most people are going to need to earn somewhere in the region of 2.5 to 3K, I would say, a month. So you're going to need a 20 to 30,000 pound account on you. So if we only had 5,000, let's see what we can grow that to in a year. We'll have a look. Come on, oil. Nothing much is moving today, guys. There's no ADRs. There's nothing. It's flat as a pancake. A minute. That's hovering at the moment, just selling off the highs. 18, 19. Maybe we should do this. Maybe I'll take a 5K account and we'll put this set file on it. See what happens. We'll test this over a different period of time as well. Still running. Harry Krishna, I mean the futures market. I don't trade futures in the morning. Don't trade Globex. It's so choppy. Gold pushing down. If I sell gold, which price should I look for TP? I'll have a look in a sec. Try and run the back test on $500. We've just done $1,000. We turned $1,000 into 4.5, into 5.5. So I guess if we did it with 500, we'd have turned it into 2.5 grand. There we go. So we just turned a 5K account into 28. So 28K times 10%, that's 2,800 a month. Could you live on 2,800 a month? If so, if you start with 5K now and compound it for a year using that strategy, you can position trade. Let's try that on the previous year to see if it was a fluke. Gold. So if you go short on gold, there's so many targets to the downside on gold. I don't know how long you want to hold it for, Chris, but I would be looking at propulsion gaps. So that accumulation break there is a target. That accumulation break there is a target. This is a good level to look for as well. That's tested, but I reckon we're down there. So I mean, it depends how long you're holding it for. I don't position trade on gold. If you wanted to position trade it and short it from there, you got a lot of targets to the downside. There's loads and loads of them. That low, which is a previous high, bounce, 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 bounce. I don't know. Just down. Get out when you're happy. I don't use targets. I get out when I've got enough money to get out with. Does running a real-time demo run, live run, affect the same data when you do a back test on the same period after the fact? Yeah, if you've got tick data, yeah. So I use tick data in my testing, which is about as accurate as you can get. I'm doing all these. I'm running all these on control points here, but I mean the tick data test, which you would have to run, would be very similar. Why did we not take any trades? Did I not just change literally? What did I just change? What was it? I just changed the date, didn't I? Weird. Suddenly decided not to take any trades. Saying that tick data is as accurate as you can get, that ain't working, is it? I don't know why that's not working. I don't know. Let's do another. I'll tell you what. Let's do another test, right? Let's do this test. Don't know why that's not working. Weird. Let's test it on a different currency. Let's pop it over on Euro US dollar and see what it would have done on Euro US dollar. That'll be a good test, won't it? Why would you do a test on a small account where DD is controlled to be less than 10%? Would you do a test on a small account where DD is controlled to be less than 10%? So doing what? Doing 10% drawdown control instead of 30%. Is that what you mean? Do it. I mean, just test it yourself. I would just test it yourself. What software do you use to code your programs and alerts? Notepad. Blown. If you'd have done that exact same strategy on Euro US dollar, so I mean, so dangerous. So dangerous, but it can happen, it can work. Right on EuroCAD.
Thanks for the follow.
Thanks for the follow. I am Rio. Welcome aboard. Clyde, did I say thanks for the follow, Clyde? I'm not sure if you, when you subscribed. Sorry if I missed you. I missed you there. I'm useless. Why aren't you using quality tick data for your testing? I am. I use tick data. I was taught to use every tick based on real ticks when testing my programs. Yeah. So I do when I'm running proper back tests, it will be, but this is just for speed. With the depends on the EA you're testing. Yeah. So there's 3 different ways of testing. You can either test on open prices, you can test on control points, or you can test on tick. Depending on the EA, how the EA executes and what the EA does as an exit strategy, sometimes you will get completely different results if you use open prices and tick. Yeah. Because some EAs work on tick, some EAs work on candle close. The market reversal alerts EA works on candle close. So control points will give you within 5% accuracy the same results as tick data. So what I will do is every time I run a test, I'm getting a bit. Let me just shut my blind a minute. A bit bright. So when you run a tick data test, you'll get roughly the same results. But for speed, if you test on control points first, and then get all of your results, all your optimization results, your out of sample backtesting results, put them all together and go, right, this looks great. Then take that set file and test it on tick data. As long as the tick data correlates with the control point data, that's fine. But if you test on tick data to start with, I did an analysis. I put it in the Telegram group about a year or so ago. I did an analysis. I think it was 9.5 times faster to backtest with control points for a 5% accuracy loss either way than it is on tick data. So I could get a year's worth of backtesting done like that, or I could use tick data and come back in 2 hours and get the same result. So yeah, always before you put anything live, you test it on tick data, tick level, every tick, always. But when I'm developing strategies, I will test on either control points or open prices, depending on what type of EA I'm testing. So there's the results on that one, blue. Very quick. So you go, pound US dollar. And again, it's all down to whether or not an instrument will squeeze. This is what does it. If it squeezes, you're dead. So you just got to hope for a non-squeeze when you try and compound like this. Tim, can you try that same back test on a different instrument, like frozen cod thyroids? I could try frozen cod thyroids, but yeah, not sure that'll work. Let's try it on a yen pair because they are notoriously squeezy. Do you need to adjust parameters? No, because everything I do is based on ADR, isn't it? So nothing to change there. Monetary amount is the only thing you need to change based on what your initial starting balance is, which I've done, adjusted that. You are low time frame scalping. Should you?
Thanks for the follow.
You are low time frame scalping. You use every tick? No. Michael Mitchell, I can't understand that question. You should always use every tick. Yeah, always. If you're M5, I think what you're saying is if I'm looking at M5 because I'm scalping, I wouldn't use control points. I would use every tick probably down there. But test it. Yeah, it's a really, really simple test to do. You can do this yourself, Mitchell. Right? Go into the strategy tester, load any EA up, run a test over 1 month. On whatever time frame you're testing on, run a test over 1 month on control points. Take that result, screenshot it, put it somewhere. Run the test again with open prices. Do it again. Run the test again on ticks. Do it again. If the variance is plus minus 5%, run the fastest one. Note how long it takes. Drawing our control point test. Yeah, that one blew as well. The H1 is running on a demo at the moment, Baggy. The H1 hedging is running on only demo. I'm not running it on live because it's in testing. It's in forward testing at the moment. So I never live test anything. I forward test it. That's the wrong one. It's this one. I'm basically forward testing it to just check what the drawdown is going to get up to. Nothing's. Yeah, it's not at the moment. Ignore that. It's 14. We started testing on the 14th, so it's doing very nice. 11.5% at the moment. In what's that? 2 weeks ish. So yeah, but I will forward test it for a good few weeks, just to see what the drawdown gets to. I'm waiting for a squeeze. Basically, we don't seem to be getting anything squeezing at the moment. So, but yeah, so Mitchell, yeah, back testing. Time how long it takes. Yeah, so I'll tell you what we'll do. Let's do this pound US dollar one quickly, right? So watch the green line at the bottom. Obviously, as you know, how quick that moves. Yeah, so when I do this on control points, when it runs, yeah, watch how fast this green line goes when it starts. There we go. So it's quick. Yeah, so we're already done March. That's 3 months. We're already done 3 months. Every tick, when I start that, you watch how slow this is. Collecting M1 data. So we're going to get 99% accuracy now on our back test. But watch how slow this thing is. Look. Not moving. It's working, but look how slow. Yeah, it is actually working. It looks like it's stopped, but it's not. Yeah, and that's a 5% variance on accuracy. So, you know, for me to be able to back test, you know, when I do my back testing, You know, when I'm doing system parameter permutation tests, for example, with the opening range breakout EA, yeah, all of my system parameter permutation tests are done on open prices, yeah, because I'm testing thousands of variations at a time. Yeah, so this test is 2,800, this test is 2,100, this is 600 runs, 2,400, 1,500 runs, yeah, and so on and so forth. If I did all this on tick level, I literally would be testing for a year to get the results, to be able to determine whether the strategy has a long-term edge or not. Can't do it. But when you run it on here, and you can do like 2,800 tests on this, I think lasted 4 hours or something. What's this? 6 parameters, yeah. So I'm testing 6 parameter permutations at the same time, doing 3,000 roughly tests, 4 hours. Tick level, 4 days. Not that long, maybe 2 days, 3 days for one test. And then I get these results and go, nah, throw them away. Because 90% of the results I get, I throw away because system parameter permutation tests prove strategies don't work. With this one, with the opening range breakout EA, it works out that actually out of those 2,800, 2,086 are profitable. So high probability that the strategy's bell curve is going to hold. So you can't do that on tick level. It just takes too long. No, there we go. So we're in the 13th of January, yeah. We got to March probably within 10, 15 seconds, didn't we? We're on the 13th of January, all the time we've been talking. But that's the difference. Yeah. The modeling quality of 99.9. We need that accuracy when we've done it, but we shouldn't test it to start with on every tick because you just won't get any testing done. So many people. I had a guy contacted me on Telegram, and he'd done loads of testing with the market reversal alerts EA, and he was testing an M5. And this is on the hourly, yeah? If I run this on M5, it's even slower. That's why the opening range breakout tests were taking 4 hours, because it's running on M5. H1 is obviously 60 times faster. No, it's not. It's 12 times faster. 60. Good at maths. So yeah, and H4 obviously will be a lot quicker. So higher time frame strategies, much easier to test. Sean, am I using ECN RoboForex? Yes. You can use their pro accounts or ECN. I think a delivery's just arrived. I might have to disappear and just grab a delivery in a sec. We'll listen for the dog alarm. Okay, I'm on demo as well. Sean, cool. Okay. All caught up on chat, which is cute. Argos. I haven't ordered anything from Argos. The wife's been shopping. Here goes the dog alarm. One sec. Back in a minute. Floral bed set. Floral bed set. Does any use pivot points? No, don't use pivot points in here. Use ADR. Use a dynamic point. Right. I've covered everything I need to cover this morning. There's no ADRs. Flat. No RSIs. We're all flat. So there's nothing really to look at much more this morning. We've covered all the analysis. So nice trade on the DAX. If you took that short, that stopped out. Never mind. Hello, new person here. Hello, new person, Daniel. Where's the best place to start? So if you go to the website, go to the free trading education. I'll put a link in now. And you've got two sections there. Well, there's three sections there. The other free training videos gives you an overview of all the important stuff that you need to know: what a system is, market reversal patterns, multi-time frame analysis, market structure, backtesting RSIs, other things, mean reversion versus trend. So this is all the basics that you need to know. These three videos are really old, but very, 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 very important. That one especially. And then do the bootcamp, which teaches you how to position trade. So it basically teaches you how the market works, teaches you about multi-time frame analysis and elastic band theory, teaches you the indicators I use personally, which show me everything that I need to know, and then how to do position trading, how to manage your drawdown, and position trade, basically. So I trade basically in a similar way to the banks, where I average into positions as they move and then get out when the market cycle's correct. So it's all on there, it's all free. If you're new to trading though, go to babypips.com. Are ADRs lagging? Not sure what you mean, lagging. ADR is a level. So it's a dynamic level based on high and low measurements from the last 10 days. So if you're talking about lagging in respect of the measurement figure, i.e. in this case, 414 is, you can't see it. Let me move my big head out of the way. There you go. So ADR is 414. So that is ADR 10, which is a measurement of it's the average daily range of the last 10 days. So in that respect, it's lagging because obviously today's range is today's range. We don't know what today's range is until today's completed, do we? So that's what you mean. I guess, yeah, but I'm not sure if that's what you mean. If you want to learn about ADR, there's a video for that on this page, which explains everything you need to know about average daily range. Sean, thank you for the session. Cool. Big Papa, my crystal ball showed me EuroCAD will hit 100% ADR to the upside today, so I went with a long. Euro US dollar, did you say? EuroCAD. Meh, whatever. One or the other, isn't it? It's either going up there or it's going down there. One of those two outcomes today with 100% certainty will occur. Good luck. You've got as much chance of it going that way as you have of it going that way. So if you've got in long, brilliant. Wait till it gets down to there and then go long again and then get out. Ta-da! Position trading. Tim, gold and presumably silver are US dollar cross pairs. Does the same for all commodities to a certain extent. Yes. So if anything that is, I don't have silver. I don't have silver. Yes, I do. Yes, I do. I have silver. So yeah, XAG USD is across with the US dollar in the same way as gold is across with the US dollar. Gold just moves more than silver. Silver's ADR is only 71. Gold's ADR is 414. So you're obviously better off trading gold, aren't you? It's more volatile. But yeah, they're all just US dollar crosses at the end of the day. DAX is just being a pain in the backside. So the gap fill's done. Oh. Difficult to know what to do with that now, isn't it? leave it. That's why we tried the opening range, because what do you do after this? Could go anywhere, couldn't it? Daniel, quick question. Are you teaching an automated system or day trading or both? Right, bear with me 1 second. Right, another delivery. Oh, she's been shopping, isn't she? You can trade it automated or you can trade it manual. Up to you. I don't. As far as day trading is concerned, my trading strategy is position trading. The trades will take as long as the trades take. So some trades will take multiple days. Other trades will take 1 day. Yeah, so there's an entry there that was in and out in a day. There's an entry there. Yeah, so that entry there, in and out 1 day. So that's a day trade, I guess. But you go in there, out there. That was the next day. Do you class that as a day trade? I basically get in and out and use the market movement to make profit when the market moves in my favor. Just banked another whatever this morning. What's that? New Zealand dollar CAD. Okay, so just close that New Zealand dollar CAD trade out. That was a 1, 2, 3 day hold. That was a 2 day hold. That was a 1 day hold. Depends what you class as day trading, doesn't it? I mean, what most people class as day trading is futures market. So you're day trading, you are getting down. I'm sitting here at 2:20 in the afternoon waiting for the New York bell to ring, and bang, I'm in. And I'm in and out and in and out and in and out, scalping, and I'm done for the day. That's what I would class as a day trader. I'm a position trader. I trade market movement. So as long as the market is moving up and down, I'm in the market. But how long my trades take is out of my control. The market moves in my direction when the market's ready to move in my direction. I've got no way of telling when that's going to happen. So I can't say what type of trading that is. It's not swing trading. It's not day trading. It's position trading. It's taking a position in the market. So at the market, my position at the moment on New Zealand dollar CAD, my position is long. When's New Zealand dollar CAD going up enough to get me out of my position? Don't know. I trade on full auto, so all my trades are automatically taken by the EA for me, but you can do this all manually. I did it manually for years. Then I built an EA because I'm lazy. I hope that answers the question, Daniel. But go and watch the bootcamp and make your own mind up. Gold will drop. Gold will drop more, sir. Yeah, it will. It will. Yep. John Wick knows everything. His crystal ball for gold is absolutely spot on. Look, it's just like that is John Wick and gold together. That's probably the best thing I've ever seen in my life. 100% guaranteed strike rate. So the way I see gold today is you've got a danger to the upside there. The danger is that the market is at the moment slightly short on it, which means it will potentially push up. Someone else trying to teach me order flow in an advert now as well. But you've got all these massive propulsion gaps down here to target as well. So there's much more downside potential than there is upside at the moment. But to get to the downside, it needs to gather momentum, which means it could possibly push up and back down again. The question is this high our new high? Low, lower high, lower low? Or is this going to turn into a symmetrical triangle contraction? No one in the world can answer that question for you. Get in the direction you think it's going and get out. On the Trade Manager dashboard, I have 15k balance, got 442 profit, and it says 8% gain. How is this calculated? Like 8% of 15k is 1200, but I only have 422. So depends which column you're looking at. Basically. So this is a return on the amount that you enter in the dashboard. Open profit is calculated on your open balance, your actual balance. Two different calculations going on. To start with, would it be better to manual trade position trading or run the EA or both? Because sometimes I find I make more money by not trading at all. Well, if you've got a job and you don't trade, you're probably going to make more money. Because if you're using the money to trade with, you'll probably lose it. It's up to you. The answer to that question, Sean, is what do you want to do? It's not better to manually trade or run the EA, because it's what can you do? There's a in the position trading bootcamp, there's a section on multi-time frame analysis, and what you can do as a trader. Whoa, this idiot. So this is basically how I see whether you can or can't trade different time frames. So if you work full time in the day, you can't check the hourly 15 and 5-minute charts. You can't do it. So you're going to need an EA to do this for you. Yeah. If you work from home, you can check these charts regularly. You can have a little laptop there while you're working, monitoring, alerting. You can use the ADR dashboard, the RSI dashboard, the market reverse alerts dashboard. They all ping you alerts. So if you're working from home, you can pretty much trade any time frame you like. Scalping and day trading is only on M5, so you have to be a full-time trader if you want to do that, or unemployed. If you're unemployed, you probably can't afford to do it, can you? So whether you manually trade a strategy or trade it with an EA is really down to how much time you've got available to trade with. So I can't really answer that. And personal preference. Can you be bothered to do this all manually? I would say you're going to learn more if you do. And then if you find that this is for you, then you can buy the EA and let the EA execute the strategies for you automatically. However, if you want to make sure you do it properly, i.e. you stick to the rules for spacing, you only take entries on a reversal alert. Yeah. So one of the biggest killers for people when they're position trading is spacing. You can see the entries here, that entry, exit, that entry, exit. If you're doing this manually, you get in there, you see price push up, and then you see price come down. People are so tempted to, go and take another one because then I'll be able to get out here. What happens is it does that and you're like, crap. So now you've got twice as much drawdown exposure than you had if you'd just taken one position. So one of the things that kills people, sorry, it's got an alert, is scaling in too close. If you get the EA will literally do exactly as it's told. If you tell the EA scale me in minimum of 1 ADR apart, it will not get you in any closer than 1 ADR apart. You as a human being will make mistakes. The EA will execute the strategy to perfection. You tell the EA to get you out with half an ADR, it will get you out to the pip with half an ADR. There's none of this, it's break even, I'm going to take it because I'm just too scared. Or, half an ADR, we got that really easy, I'm going to let this run. This thing's definitely coming down. Yeah. So one of the reasons I personally built the EA for myself was to stop myself making stupid mistakes, because I'm human, and I still, no matter how much experience you've got in trading and how much you see things play out and you know what's going to happen, you're a human being. And when there's money on the table, you will make different decisions to what you think you do and what your strategy dictates you should do. So EAs remove the human and fully automate the strategy. Yeah. So everything you see in the P&L here is executed to the millimeter of exactly what I've told the EA to do based on the strategy I've asked it to execute. Humans don't get involved. So therefore it works. Yeah. So it's up to you and how disciplined you are as a trader as well as to whether you use the EA or whether you do it manual. But you'll understand more doing it manually. You know, some of the stuff, like I say, I just said this morning, I've just closed out something. What have I closed out? I didn't even know it was in it, to be honest. The EA took it, and I mean, I would have known I was in it, but you know, you just don't look at it, do you? You just get in, it gets in, it gets out. Half the time, you open up P&L and you go, oh, bank $500. Didn't even know I'd taken a trade. But as a human being, you've got to sit there, wait for the alerts, check the charts. You know, today, we've got nothing, have we? So you'd be sitting here watching the RSI dash, waiting for an alert, doing nothing. And then you go off and walk the dog. You'll come back, an RSI hourly alert's gone off. You've been out for an hour with the dog. You've come back, you've missed the entry on M5. Damn. What do you do as a human? Oh, I'll just take it now. No, you've missed it. The EA will just take it. So it is, for me, the automation aspect makes a big difference to long-term results, because you don't have an idiot in charge, which, let's face it, this is why this video exists on the website. System hopping video, yeah, it's only 10 minutes long, 7 minutes long. But the reason people do this, the reason people hop from system to system, strategy to strategy, indicator to indicator, EA to indicator, is not because there's a problem with that strategy, that indicator, that system, or the EA itself. Yeah, the backtesting results are brilliant. It's out of sample tested. It's parameter permutation tested. It looks really solid. You get it, you put it on your chart. It has 4 losing trades, and you go, oh, it's useless. I'm going to try Agimat. Dennis, someone else's EA. And then I'm going to try Gold Rush, because that looks great as well. There's nothing wrong with that EA you just abandoned. It just had 4 losing trades. What's its strike rate? 50%. You had 4 losing trades. So you missed out on the other 6 that are coming? Why? You system hop because it doesn't do exactly what you want it to do when you want it to do it. It's a massive problem. And 90% of the time, people look at strategies like simple moving average crossover or an RSI extension mean reversion or a Bollinger Band mean reversion strategy. They backtest it to death for months and they see it working, and then they go and execute it and it loses, and they're like, oh, crap. Backtesting is never the same as forward testing. No, it's not. But it doesn't mean the strategy's lost its edge. It means you couldn't be asked to wait. Backtesting, right? We just did that test this morning in here, didn't we? And it ran for an entire year, and it executed that entire year in what? 1 minute? You've got to wait a year for that to play out. Your patience level won't allow you to let that strategy play out because you haven't got the patience to sit there and verify for a year manually that this thing works. And EAs, you know, will just do the thing for you. So I'm up for automation, but 90% of the EAs out there are utter rubbish. They're all back tested and they're curve fit to death, totally curve fit. But you just got to watch your trades, basically. Just manage it. Let the thing automatically execute the trades for you. You watch and manage and analyze. Yeah, and let the EA just press the button. That's all it's there for. It's pressing the button, isn't it? At the end of the day, I usually consider Monday a wait and see day for trading. It's quite often a day you can get trapped in a bad trade. You only get trapped in a bad trade if you are using a stop loss, Daniel. any trades I take today are not bad. They're only temporarily wrong. But again, do your analysis. Yeah, if you look at your trade analysis and it tells you that Monday you are crap, don't trade Monday. Simples. Though trade, I only trade break of structure and reversal. Gold is stuck, actually maybe building liquidity to more. You're totally over analyzing stuff though. Good luck with it, but that's you're trading ICT and it's too complicated. Adjusted by starting balance with an indicator, now it's showing correct gain. Cool. Would you recommend setting the EA to trade only in the direction given by the bias? Yep, Kenny. So that's a brilliant way to use the bias scorecard. That's why I built the bias scorecard. So you can adjust, if you want to adjust basically the strongest and weakest trades to take, just adjust this. So you can check this on every morning. Literally, come and check this, activate those long on the EA, activate those short on the EA, anything else, either deactivate it or leave it trading in both directions. That's the point, that's the purpose of the bias scorecard, is to try and get you into trades just in one. I notice what I use this a lot with my my funded accounts when I'm looking for trades. I use this specifically because of this a lot of the time. I'm trying to trade against retail most of the time with the positions. So you're going to really cut down the amount of entries you get, but you're more likely to get 1 to 2 entry positions and no more, because it'll play out in your direction a lot faster. But you'll find it harder to get in. Look at US dollar CAD for longs, yeah? So this week, last couple of weeks, it's actually been a little bit better, but look at this here for US dollar CAD longs. You had 1 entry there, 1 entry there, 1 there. Not sure about that one, to be honest. Depending if you're using 30 or 25, you may have had 1 there. That's it. Yeah, that was really your entry, and potentially you would have got that one. See, 1, 2, 1. You wouldn't have got an entry there because it wouldn't have been a reversal. It's a spike, so you'd have got a 1. Yeah. So your US dollar CADs, because you're staying in line with bias, you're only if it's a pullback, you know, we're basically trending, aren't we? That's why that's where they're biases. But your entry opportunities are going to be a lot less. Look at these shorts I took. I took a short there, short there, short there, short there. 1, 2, 3, 4 trades, 100% strike rate. All worked, absolutely fine. No more than 2 entries on a position. All counter what it says on the bias scorecard, because I'm greedy. But because it's hard to get into the opportunities. So there's nothing wrong with counter trend trading. As I say, at the moment in the bias scorecard, an 8 is actually a fairly strong buy, isn't it? Only because of retail, though. When that retail is not there, that's a 6. When that retail is a -2, that's a 4. So we're always going to be looking longs on this, but it's not anything. It's not a 10. It's not a 10 plus, which is a strong buy. Really don't want to get in front of that thing type buy, is it? Yeah, everything's kind of a weak buy, a weak sell, which is why I say at the moment it doesn't matter too much really. But if you want to be belts and braces and 100% safe, or not, you're never 100% safe, obviously, but as safe as you can be, if you just use the market reversal alerts EA set to trade in those directions, your entries are going to be a lot smoother. I'm doing this very same sort of process on my funded accounts, using support and resistance and market reversal alerts EA to get me into entries. So rather than looking for RSI extension pullbacks, I am looking for those. If they occur, I'm taking them, fine. But what I'm doing is I'm looking for support resistance zones to trade from with the market reversal alerts EA. So if I see US dollar CAD is a buy and look at US dollar CAD and go, right, we're down at the support area. If we get back down to here, I'm going to take a long, like that one there. Yeah. So I'm looking for long opportunities, but as we're not necessarily going to get pullbacks, which are strong because the relative strength is in line with the bias, use support resistance zones. So this area here, I took a long out of, I think it was actually that Tuesday last week. It was here. So it wasn't that one, it was this one. Oh, that was, sorry, yeah. So the trade I took last week was this one. It was off of this, which was off of that previous support. This was the initial support bounce. So I took the second support bounce here. Yeah. So a reversal alert in there. Didn't quite get the RSI extensions down to the 25 that I would normally take, but I took it because it's support and in line with the bias. Yeah. So, but all of this is, and this is why I keep saying in the bootcamp, and I say it in here all the time. Yes, you can put an EA on a chart and let it just go. Of course you can. And yes, it will work a lot of the time. But for me, the best way to use EAs is to analyze the chart and go, right, I want to go long on US dollar CAD on the next sign of strength. So I'll stick it on the US dollar CAD chart on my funded account. And I will say, go long. That's it. I literally just say, go long, get me in. And then I just want it to get me in. So I haven't got to sit here, go down to M5 and wait for the next alert, or sit here and monitor the dashboard and wait for the dashboard alert to happen. I let the EA just get me in. Yeah. So I'm putting the EA on the chart and saying, do your thing, and then scale me in if you need to. If it goes against me, scale me in as usual as a position. But using your brain and you as a trader to help have the EA do the automation for you. It's a combination of the two. What's your business model, Lee? Do you sell a product or do this just for fun? I trade for a living. I make some EAs and indicators and I do this for fun. Yeah, I do this to keep me in check, and because 14 years ago a mentor made me profitable and I said I would pass it on. That's why it's all free. Although you obviously think I'm here for other purposes, which is fine. Everybody's out for something in this industry, obviously. But yeah, I make EAs and I make a sideline off of the EAs and the indicators. Would you recommend setting the EA to trade only in the direction? Just done that one. I think my mind is system hopping your strategies. You have so many good strategies. Just pick one. H4, M5, Sean. Go H4, M5, forget it. Or H1, M5, forget everything else. Or ADR reversals, forget everything else. Just pick one. Or use them all. The only reason I show them all in here is to show people the trades. Yeah, the reason these EAs are running in here and taking all the trades on all the strategies is so that we can see them all playing out. Yeah, so we look at these every day and go, right, euro yen, that was an H4. This is H1. So that was an H1 RSI extension. Yeah, that was an H1 RSI extension, that long, that short. Yeah, and on M5, we dropped down. We waited for the reversal alert. Where the hell's the button there? Sorry, this is a new MT4. Everything's in the wrong place on my VPS. So there was your reversal alert, and there was your exit, half an ADR. Yeah, so that's why these are all running the strategies. All three of the main core strategies, ADR reversal, H1 M5 and H4 M15, all running in here, so that we can look at it every day and go, look what this profit's making. But I don't run them all like that all the time, because you're going to get duplication, aren't you? What about GJ? I've covered all the analysis. First TP hit on gold, Chris. Good job. There you go. There's your propulsion target hit. Good man. Afternoon, Luke. What are your thoughts on pound CAD? Already covered it. I've covered all the analysis, guys. Just watch the replay. I've done analysis on everything. I'm short at the moment, pound CAD myself, in some drawdown. It's stuck. Been stuck for 3 days or 4 days now. Oh my God. Sorry, 1 second. Just got to grab the door again. Too many deliveries. My God. Would you believe it? Harry, are you in here? Jehovah's Witnesses at the front door. Sorry. It's literally must be every 3 or 4 weeks we get knocked on by the Jehovah's Witnesses. It's like, I'm not religious now. I wasn't religious 3 weeks ago. And in 3 weeks' time, when you come back, I'm still not going to be religious. Give up. I'm going to have a bucket of water up here. Next time he rings the doorbell and I look down and I see him, I'm just going to go, sorry, I didn't realise that you're on my property. Could there be a good adjustment to RSI to get more entries in line with the bias? Yeah, so what you could do, Kenny, which is what I often have done and do normally, but not at the moment because the market's contracted, is switch to 21. Switch down to a 7, and you're going to get an extended RSI. Yeah, so this will give you more entries, but yeah, I mean that is something you can do, but the danger with the 7 RSI, there's not really any instances on this, but the danger of the 7 RSI is it gets embedded sometimes. I'm just trying to, maybe it doesn't with Forex, it does with indices. Yeah, it's not bad actually. But yeah, you could adjust the RSI down. So if you get a faster RSI, obviously you're going to get more entries, but with more entries comes more risk. So, but there is that option if you want to. There's no right or wrong. Yeah, I use the 14 and the 21. The 21 for when we're in a volatile market, and the 14 when we're in a calm market, as we are at the moment. But if you want to use a different RSI, do it. There's no right or wrong. Basically, with position trading, like I say, it's a methodology. You can apply position trading strategy or methodology to anything out there. Yeah, you could any strategy you're using at the moment. You can, as long as it's a mean reversion strategy, not a trend strategy. As long as it's a mean reversion strategy, or if you wanted to, a trend continuation strategy, I guess. But any strategy you trade, if you apply the position trading methodology to it, you'll instantly make more money with it. So if you, this is mine, this is what I've developed, this is what I use, and this is what I've cobbled together over a decade to make this work for me. Other people are using different things to position trade and working absolutely fine. You don't have to use the market reversal alert theory. Yeah, you don't have to use market structure. You will be, because it's there. Every strategy, whether or not it admits the fact that market structure is in there, is using market structure. Mean reversion has to use market structure because mean reversion is pulling away from a high. High is part of a market structure move. If a trend trader is trend trading, they're actually trading pullbacks in market structure. It's just market structure is the market. So how you measure market structure movements with an indicator is entirely up to you. You can use anything you like and any setting on any indicator, CCI, MACD, it's stochastics. If you want to be that bad, it still works. But stochastics is going to get you in almost daily, which is no good, is it? But yeah, you can adjust it to whatever you want it to be. Yeah, play with it. But back test it. Yeah, so get the trouble with the buyer scorecard, you can't backtest the buyer scorecard. So you can't really backtest it in that respect because you wouldn't know which way it would have been at the time, would you? So, but I would always encourage people to test, yeah, and change, use whatever you want to. This if you watch the bootcamp, this whole methodology and way of trading has been developed over 15 years by picking bits out of everybody's strategies that I've learned over the years and making my own that uses all the stuff I know works. So it doesn't have to be this RSI setting or anything. You can bend everything in here to make your own thing. Just I've tried everything, and this is what I found works best. So, but that's for me. I'm testing out myself. But yeah, so what are my thoughts? There you go, there's my thoughts. Mitchell, do you have any live track record of your trading? Only what I show in here. Yeah, only what I show in here. Mitchell, go. You're a conspiracy theorist. I get it. Yeah, I get it. You're not sure. You've come here for the first time. You've seen this bloke, English bloke, doing trading. I have been doing this for 4 years live on live streams. I trade every day, and I've shown my profits, my losses, everything along the way. I personally do not want to share my personal bank account details with you. Every trade I take on my accounts and my prop accounts. And if you don't like it, tough. But I'm hopeful that being in here every day and showing you everything running and the system, the strategy playing out on a daily basis, the drawdown and everything happening live is enough to teach people that, yes, this is what I do. And but I know everyone wants everybody's P&L. But anyway, I'll just go and say, why don't you ask ICC the same question? He only started trading live this year. Thanks for your explanation on position. It's okay to ask a question. I just want to see why before I jump in. Yeah. Tim, Sean, as Lee says, pick one and run with it. I choose H4M15, mean reversion and trend pullback, as the entries are slower, but still a lot of overlap with most strategies. You will get a lot of overlap. If we look at the accounts that are running at the moment, it's not. So this is no, let's not put that one because that's the hedging. So pound CAD short on H4, mean reversion. Pound CAD short on H1, mean reversion. I think we just closed out a pound CAD short in here somewhere. There you go. No, that's pound Swiss. But ADR, I'm pretty sure we had a pound CAD short on ADR, didn't we? This is a pound CAD ADR. So there's an ADR hit. So the ADR is 114. Yeah, so that was 128. So you had an ADR short pound CAD. Yeah, so you're going to get the same trades across the three strategies because they're all just variations on the same strategy. So the market, obviously, the whole premise of the strategy is bank movement. Yeah, so they're all piggybacking off of the bank's profit take movement. So therefore, they're all going to trigger roughly of a similar way at similar times, aren't they? So, ask the AJH ask the JH. Oh, Jehovah's Witnesses. If they've heard of prop firms. I can't. It's the way they turn up in a lovely suit and tie. They've always got a black folder with them, haven't they? We asked them in one year when my wife and I, in our young days, basically asked them in because we were curious. We were actually drunk at the time, just to see what they say. And we just like let them waffle on for a little bit, and then off they went. Sorry if you're a Jehovah's Witness in here. It's just, nothing wrong with Jehovah's Witnesses. I'm just not religious, and I don't believe in it. So, but you know, if you're going to keep knocking on my door, why not? It's the same as when I get my phone calls. Yeah, on the mobile. Yeah, you get hello, yeah. Oh, you're calling from a broker. Oh, right, okay. Yeah. I know what the Forex market is. Yeah. And I keep them talking for as long as I possibly can. And I tell them I'm a multi-millionaire trader, and I used to work for Warren Buffett. And obviously I'm not. And yeah, I just string him along for as long as I possibly can. Reason being is because if he's on the phone to me and I'm having a laugh with him, he can't be on the phone to some other poor mug that he's going to rip off, because that's what those broker phone calls are. But every now and again, you sign up on a website and you just get bombarded with them. And you just got to have a laugh with them, haven't you? Same as the bloke that phones me up from Microsoft every now and again telling me I've got a virus on my computer. Yeah, you do know I used to be a software engineer, mate. Anyway. Sorry, I'm old and cantankerous. I'm allowed to do things like this. I started by trying one trade at a time manually until I was confident to take simultaneous ones, not going to the stage of letting the EA take them without my input. Confidence. This is what I'm saying. When people ask if it's better to use the EA or not, the EA will show you the perfect entries. But the perfect entries aren't like pound CAD. Yeah, I've done an aggressive drawdown control position here on this because it's getting a little deep. You're going to have to do these, but you'll only have to do them every now and again. And it's just a case of waiting for the market movements to happen. But if you let the EA do this for you, it's kind of like you watching the perfect trader trade. But doing it imperfectly yourself is actually a better learning curve, because when you've done that, I'm getting in short. Oh, it's only a quarter of an ADR. I'll take another one. Oh, crap, we've got half an ADR. Okay, I'll take another one there because I said I was going to get in half an ADR from this one. And then it pushes up and you go, oh, no, that's an ADR. So you get in there and all of a sudden what you realize is you've got 3 times the exposure you should have. When that trade comes down and you get out of it on the profit take move, that's a learning curve. And you go, oh, I'm not going to do that again. And until you've done those things and you've seen those things play out, it gives you so much more confidence in the strategy when you see the bad things actually work. Get yourself into crap, the worst possible trade you can get into, and get yourself out of it with a profit is a massive learning curve. And you won't do that with EA. There's massive pluses and minuses for doing it manually and doing it automated. A personal thing. Much better seeing a face to the voice. Thank you, Mace. Are you sure? I had a shave today and everything, and haircut. Look, Lee's approach is legit. One eventually connects the dots and adapts to your own strategy. Yeah. Devil horns chair. It's my ball chair. Not to be confused with ball, the other ball. Right, I'm going to leave it there today. We've had quite a long session, 3.5 hours. So DAX is back up to highs. Good short opportunity. I'm going to try and do some futures this afternoon. So I've signed up with a futures prop firm again. And I'm basically going to test out them. It's some kind of Tradeovate link. I've got to get set up in Jigsaw. So assuming I get the software working, I'll be doing futures this afternoon for a bit. But basically, I'll be back at 220. We'll have a look at the NASDAQ, see how that's going. And yeah, see if we can get some futures going, if I can get that up and running. So should be a good afternoon. But apart from that, really not a massive amount of movement anywhere today. We are starting to move a little bit now on stuff. So we are getting a little bit of movement finally, but nothing particularly dramatic. So, all right, if you've got any questions, I'll be in the Telegram group, which I'm always in. Otherwise, hopefully I will see you at 2:20 this afternoon. Give us a like on the way out if you liked it. If you didn't like it, don't give us a thumb down. But yeah, hopefully I'll see you at 2:20 this afternoon. We trade the New York session. If not, I'll be back tomorrow morning at 7:50, and we'll do more analysis from there. All right, have a good one. I will see you later.